Wall Street Money Machine and his newest release, Stock Market Miracles, is here to entertain you and show you how to get rich. Will you please help me welcome Mr. Wade Cook?
Thank you. Thank you. I appreciate that. Thank you very much. Listen, we've got a lot of information to cover tonight, so we're just going to get right to it. I need to make some assumptions about who is sitting here and why you are sitting here. First of all, my assumption is that you're here to learn how to make more money. Is that a fair assumption? Okay, do you want to make a little bit more or a whole bunch more? Where are you? How about filthy rich type more? How would that be? How about so rich your family and friends won't talk to you anymore? That'd be all right. No, I'm just joking. All right, if you're here to learn how to make more money, then I'm also assuming that you're not here to learn how to, like, say, buy mutual funds. Boring as can be. Maybe they have their place later, but you want to learn some new ideas about making money in the stock market. And by the way, talk about new ideas. You hear about the guy that goes into a bank in downtown. He walks in and says, I want to get a loan for $25. I'll give my Cadillac for collateral. The banker says, okay, draws up all the loan documents. The guy signs the papers. The banker hands him the $25. The guy gives the banker his car keys, and he walks out the door. Now, he comes back just 3 days later, and he says, I'm here to pay off the loan. The banker says, okay, it's $25, it's $1.75 in interest. The guy pays the money. The banker hands the man back his car keys, and as the guy's walking out the door, the banker says, hold it, this is crazy. Why would you ever give your Cadillac for collateral for a $25 loan? He goes, where else can I get parking downtown here for 3 days for $1.75? Now, tonight, if I could show you some new ways of parking your car, maybe some new ways of making money, this night will be a success. Now, I'm going to get into stock market investing because that's what a lot of you came here for tonight. But in order to do so, I need to take you back a few years, back to when I got started investing in real estate. Now, this is not going to become a real estate seminar, but allow me in 1 or 2 paragraphs to explain what I did. Because I don't think you'll be able to understand what I now do in the stock market, the kind of money that I rapidly make, unless you understand my heritage, my lineage, and where it all came from. These ideas have roots in better ideas. Now, I was a dead broke cab driver. I mean, people think I'm joking about that, but I was a cab driver. I was yellow cab card number 22. And by the way, 22 is still one of my lucky numbers. Everything I do, everywhere I go is 22. I just rented a car the other day, and it was space number 22. Everywhere I go, I love the number 22. And I was driving cab. I was selling life insurance a couple nights a week. I was teaching early morning church class. I was selling life insurance. I was doing all this stuff to pay the bills. Anybody been there? Matter of fact, right now in this room, most of you are too busy to get rich. You are so busy doing mundane stuff, just trying to get the bills paid, that you don't have any time to make any kind of serious money whatsoever. Well, there I was doing all this stuff, trying to get the bills paid, and then I went to one of those rah-rah, you can get rich in America seminars, right? Go out and buy a house, go out and buy a duplex, and all your problems are over. They don't tell you that as soon as you buy a house or a duplex, all your problems are just beginning, right? But I bought into it. I'm going to become a real estate investor. I didn't have any money. I borrowed $500 from my father to buy my first little house. I scraped together money driving in a taxi a couple extra weekends to buy and paint up the second little house, and that's how I did it. At the end of my first year, I ended up owning 9 rental properties. Now, seriously, is that pretty good for a cab driver? I had 9 rental houses. I did my financial statement. You know how you take your assets and your liabilities and there's your net worth? I was worth $120,000 on those 9 properties. I mean, pat myself on the back. $120,000. And then a $65 electric bill came due, and I didn't have the money to pay it. Anybody ever been there before? You may have assets, you may have equities, but you don't have any cash to pay the bills. Well, there I was, dead broke as this cab driver, now as a landlord, and I didn't have any money. I decided that I was going to sell something. Now, just time out on this whole process. Everybody, when they heard that I was going to sell a property, the real estate agents that were involved, my friends, everybody that supposedly knew everything about everything, said, oh, don't do it. They started calling me names. You're crazy. Don't sell anything. And I got to tell you, some things happen in life, like when they're supposed to. That is called serendipity. Serendipity is a happy or joyous discovery on the way to something else. Well, have you ever had that happen to you? I mean, you walk into a bookstore, a book falls off the shelf, it hits you in the lap, you open it up, you read it, and it's exactly what you needed at that time in your life. Well, what I read at that time was 2 things, really. One was in the Forbes magazine. I still love Forbes magazine to this day. But not the guy that's running the magazine now, but the dad. Malcolm Forbes, the one that's not Steve Forbes, the one that ran for president, but Malcolm Forbes. He said, no success is ever accomplished by a reasonable man. Guys, you can write that one down and take it to the bank. Let me say it again. no success is ever accomplished by a reasonable woman. It's not in the cards. See, I mean, guys, I hate to say this to you, but because I see all these people teaching all these time management seminars on how to get your life organized. You seen all that kind of stuff? Throw all that garbage away. Wealth comes from chaos. Everybody's just staring at me right now. What are you thinking? I mean, I just shot down the last 20 years taking seminars on trying to get your life organized and all that. Guys, wealth comes from chaos. Now, don't get me wrong. You can organize the chaos on. When I read that, wow, this guy knows what he's talking about. Because, see, I wanted to sell one of my properties. Everybody was telling me that I was crazy. Now, by the way, time out on the word crazy. Have y'all realized that you're not going to get rich being logical, orderly, and sensible and reasonable? It serves no purpose whatsoever. You want to get rich, you got to stick out. You got to be nuts. You got to be crazy. By the way, talk about crazy. I eat Chinese food almost every morning for breakfast just because it reminds me to be a little bit strange all day long. I mean, I call home. My daughter gets on the phone. She goes, "Hi, Dad, I love you. You're crazy." My kids know that I love being called crazy because it makes me feel different. By the way, talk about crazy. I got a crazy daughter. This is one that really sticks out. We're over visiting Grandma in San Diego. She goes, "Grandma, you're sure getting fat. Grandma, what are those wrinkles on your face?" My wife finally says, Carrie, you don't talk to women about their age, and you don't talk to women about their weight. Later on that night, Carrie came out of Grandma's bedroom, and she says, "Grandma, I've been back in your bedroom, and I saw your driver's license. Now I know how much you weigh. I know how old you are, and I know that you got an F in sex." Okay? Everyone stick out. Well, let me tell you what I did. I put that house up for sale, even though everybody told me I couldn't do it. I put that little house up for sale. I sold it. What happened, though, was the guy was down getting a new bank loan. He qualified for the loan, but the bank would not give a loan on that house. It had that old kind of block and post foundation. Another friend told me, "Well, why don't you sell it on contract?" And I said, "What's that?" He said, "Well, you take the guy's down payment. You take his down payment. You take the monthly payments. You, in fact, become the person's bank." Now, have y'all heard, how many of you heard of this kind of stuff before? People just buying and selling. See, now, most Americans don't do it anymore, but do you realize that before the 30s and 40s, this is the way Americans used to buy farms and ranches and houses from each other? There were private contracts between people, private treaties. There were no 30-year mortgages at the local savings and loan. They were just private contracts. I didn't know I could do this, so I walked into a title insurance company. I said, "Have you guys ever heard of a contract before?" And they said, "Oh, sure, we do this. We use a deed of trust nowadays, but yeah, we do this all the time." I said, "Well, good, do it." They typed up all the papers. I walked out of closing a couple days later, and I had a $1,200 check in my hand. Now, please understand, this little junky rental house, I purchased it with about $1,000 down. When I sold, I actually about $2,000 down plus the fix-up money. I sold it for $3,000. And after all the closing costs, I had $2,200. I had about $1,000 net right there, but the guy's payment coming into me for 23 years was going to be about $85 higher than my payments going out. I'm going to make, net, keep, go to the grocery store and spend $85 a month for the next 28 years. Now, can you all deal with that for a sec? No landlording problems, no muss, no fuss. I am a banker now. I've got this guy's payments coming into me. He says, "Whoa, teaching all these real estate seminars about all these rental properties have missed the boat here. Why don't I just go out now and buy a house that I can fix up and resell and buy another one I can fix up and resell?" Well, I did that. I did it for the next year. I started when I was 27 and a half. By the time I was 20 years old, and these checks on this one, $110, $145, $62, $69. I had all these checks coming in, what I needed to live on. At the ripe old age of 29, I just retired. I don't work ever again. Now, I was out playing golf every day for 7 months. I was retired. And I'm kind of joking about that because I live in the Seattle area. You don't go golfing every day in the Seattle area. It just rains too much there. By the way, I saw the thing on TV the other day. It said, this guy back in New York says, "I was out in Seattle last week and it only rained twice. Once for 4 days and once for 3 days." Okay. But I had all this money coming in, and I was able to quit and retire. Now, finish the story so we can get on and show you what happened in the stock market with my stock market investing. As I was successful, I was able to write a book. Now, I didn't do real estate so I could become a college professor. My lifelong dream was to teach. I love teaching, and I wanted to become a college. When I went down to go to college to get a degree so I could teach college, I ended up, the guy at the title insurance company said, "Man, you stuff. I don't know very many 29-year-olds that are retired. Why don't you write a book and show other people how to do this?" I didn't know I could write a book. So I just sat there and wrote 12, 13 chapters, and I wrote my story. There's houses come up near Oldham, and I made a that. And by the way, has anybody seen over the last 10, 15 years a lot of other real estate seminars come and go? I've seen about 120 of them. Where are they all? We still do seminars. We teach people how to do real estate. There are guys who are teaching all these nothing down and all these, buy without cash type seminars. I've seen them come and go. Where are they now? teaching people how to be one with the universe, and they're do all this other, I don't know what they're doing, but I'm still out here because my real estate works. Almost every day I've got people come to me saying, I bought your book 8 years ago, and I bought your book 3 years ago, and it still works. The book, by the way, is called The Real Estate Money Machine, which has now been in the bookstores, I think, 17 years. It works. What happened, though, was it got me on this lecture circuit, out teaching seminars. I never did, by the way, become a college professor. I've taught at a lot of colleges now in their executive lecture series and things like that, because everybody's pretty much fascinated by how a cab driver can make this much money. Well, I made the money by putting the emphasis where it should be, which was on selling real. I only bought a house, so I would have... I learned another lesson. By the way, about some of these lessons tonight, and I don't want to turn this into Sunday school class. Maybe we should, because some of you haven't been to church for a while. But how many of you think or agree that there are just myriads, just tons of lessons that you can learn right out of the Bible that you can apply to your everyday life today? Anybody agree with that? Right, well, I'm going to use a couple of those, like Financial Wisdom of the Ancients, which, by the way, is a subtitle to my new book called Business by the Bible. Here's one that I learned. See, I would buy that little house for $80,000. Maybe it was worth $100, $105, and I'd try to sell it for the $105,000. I'd try to get every penny out of that deal. And I realized after a while, hey, this is kind of working. Now, I was kind of studying the Bible, kind of not studying the Bible, and I would kind of pick and choose. I was very selective on those principles of the Bible that I wanted to employ in my life. I think a lot of us are that way. Well, I like that law, so I'll abide by that one. But I don't like that one, so I'm going to go do whatever I want. I was kind of that way. Well, I read in the book of Leviticus, and it's also in Deuteronomy, just a couple little scriptures that say, thou shalt not glean the field. Y'all heard that before? Thou shalt not glean the field. What does that mean, to glean? Now, you can go through and pick the wheat and the corn or the grapes the first time, but to glean means you're going to go back in the second time and get everything you left by the first time. It says not to do that. And it says why? Because you need to leave some there for the widows, the fatherless, the poor, and a couple places that mentions foreigners or strangers. That's God's way of taking the bounty of this earth and making it real, making it available to all of us. And by the way, if I can dedicate part of the seminar tonight to you sitting here to really think through some things, I think that we live our lives by a whole bunch of half-truths and mistruths. And I like to dedicate the seminar to straightening some of those things out. You heard, for example, practice makes perfect. Y'all heard that one? Hogwash. You practice something wrong, you can still do it wrong. The way it should be said is, perfect practice makes perfect. See, we feed our brains so many lies that pretty soon they sound like the truth, right? Let me give you another one. It takes money to make money. Y'all heard that one? Husbands use that on wives, and wives use that on husbands all the time. You can't start into business. You can't make millions of dollars because you only got $800 and you can't do it. Guys, yes, it takes money to make money, but it's a half-truth. It doesn't take your money to make money. See, it's a half-truth. We live our lives. If you get caught up in these half-truths, mistruths, then you just set yourself up for failure. Can I give you another one? I'm going to have you all help me on this one. You've all heard the expression, you can't have your cake and eat it. Have you all heard that one? I want you to say it all out loud to me. You can't? Guys, that's a lie. Think of what you're telling your brain on that one. That is not the way it goes, by the way. You can't have your cake and eat it too. Can you have a cake and eat it? Yes or no? Yes. Then why are you saying that? You're lying to yourself. The way it goes is you can't eat your cake and have it too. Now, is that a fair and a true statement? You can't eat it and still have it. Now, you can have it and eat it. See, but we've been telling ourselves lies for so long that pretty soon they sound good. That you can't have your cake and eat it too. That's in like 3 rock and roll songs that I know of. We sing it. It becomes part of our lives, but it's a lie. All right, now let's get back to where I was. I love this financial process, and I wanted to teach college. The guy said, write a book. I wrote a book. That got me into the lecture circuit. I was out teaching in cities all across the country, and I was very, very successful at that. I mean, I was invited to speak sometimes 8, 9 times a week, and I got to the point where after about a year, I was making about $15,000 to $18,000, sometimes $25,000, $30,000 every time I walked in front of an audience. I mean, it's like if they invited me to come and speak in Wichita, I was guaranteed $15,000 to $18,000 for a 2-hour lecture. Now, that's pretty good, because this is like 15, 18 years ago. I mean, I made so much money, and we got in the habit of living on really good income. Well, it made me so much money during selling books and all that I didn't know what to do with it. At first, I took some of the money and bought second mortgages with it. But then you had to be home to go out and check out the houses and do all this kind of stuff. So what do you do with it? You stick it in a bank and get 4% on it? So I opened up an account at Merrill Lynch, and I opened up Smith Barney, and I started putting money aside. Put $10,000 here, $5,000 there, and I was having such dismal results with the stock market. And those first couple of years were not that bad of years in the stock market. I bought one stock at $9. It went up to 10, and I was so happy. I thought, wow, I got this thing figured out. It went down to 8 and sat there for 2 years at $8. I bought one mutual fund, all the advertisements for this mutual fund. I bought one mutual fund that had gone up 14% a year or more 3 years in a row. As soon as I bought it, minus 2%. Already been there before. I mean, it's like everything looked so good. I mean, and I didn't get it. I didn't understand the stock market at first. Now, what I employed later on was and it first started by figuring one thing out from my stockbroker. He said, Wade, I know how disappointed you are with your stock market investments, but I'll get a lunch. And at lunch that day, he said, by the way, I was at the time, and Motorola's not headquartered there. It's in Schaumburg, Illinois. But they have Motorola plants all over Phoenix and Scottsdale, that whole area down there. He said, I want you to buy some Motorola stock. Okay, now, by the way, if I say the name of a company, and if I know the ticker symbol, the trading symbol, I'll put it up here. He said, I want you to buy some Motorola stock at $50 a share. So I did. I bought 100 shares. That's $5,000 plus about 8 commissions. Now, he said, put in an order to sell this stock when it gets to $60. So, and by the way, those of you that have your brokerage accounts, I think you all understand that you could put it to sell. It doesn't cost anything to place this order, but then as soon as you get the order in there, and it's there. Now, when I first started, it was 90 days. Now, it's called a GTC order, good till canceled, and it's in the computer for 60 days. So, sure enough, 6-7 weeks later, the stock climbed up to $60. I ended up selling it, made $6,000, at about $90 in commission. So, all in all, I made $830 profit. Now, that does not seem like very much. It's a $5,000 investment, a pretty good deal. Would anybody be happy with that or not? Where are you guys? Not bad, especially when you think it's only 6 or 7 weeks. Then he said, now I want you to buy it again at $50 a share. So I put in the order to buy it when it got down to $50, and sure enough, a little over a month later, it was back down to 50, and I bought another 100 shares. So I have it again. Now he said, now put it in order to go up to 60, at 60. I said, now how do you know it's going to go back up to 60? He said, Wade, I've been doing this for 3 years. Just put in the order. So I put in the order at $60. Sure enough, it went back up to 60, and I sold it. And I made another just under $1,000. Now, one time, by the way, when I sold it at 60, it went up to $61, $62. I said, oh man, I missed out on some of the profits. By the way, is that still okay to make a nice profit? I started at 50, the stock went down to 49 and to 48, and I was getting kind of worried about it, but then it went right back up to 60. I sat there and did this with Motorola for 3.5 years. The last time I did it, by the way, the stock climbed up to about $100 a share, did a 2-for-1 split down to 50, went back up to around 68 to 70, and by the way, guess where it is right now? Back rolling between about $52 and $62 a share. I mean, it's amazing that this stock, it did a stock split and it's back down, but it's right back up there again doing the same roll. I got to tell you a quick story. Out by my house is a Chinese restaurant. I go in there all the time and they see my nice Mercedes and they always compliment me on my car. Well, one day I just took them a book, the owner of the restaurant, and then a little bit later on, I guess she had got one of my tapes in the mail or something like that off of a radio show. And she said, she tied my picture together with a book and she goes, this is like a year after I met her, she goes, Cook, Motorola, $50, $60. I mean, I've been doing this, I've been telling this story about Motorola. Well, it works, everyone. Now, this is what I call rolling stock. Now, it says my name, I give my names because I don't read anybody else's books or not too many other books on stock market investing. Do you see the roll right there? Now, some stockbrokers call this channeling. Do you see the channel? It's channeling between $50 and $60. It has support down here at 50, and it has resistance up here at 60. It may go to 61 or 62, but then it goes back down. Now, I'm not saying how long Motorola is going to roll or even if it's going to even roll one more time. I'm saying I did it for a long time. Now, talk about serendipity. Here was serendipity in me because I found my first way to use the stock market as a cash flow machine. Now, if you'll open up your handouts to the inside left-hand page, before I go on with this, I want to show you a few ideas about investments in general. There are basically 3 reasons. This should be in your left-hand page at the top. There's basically 3 reasons why anybody invests in anything. I'm going to list these 3 reasons right here, and as you write these down, I think you'll see yourself here. You'll say, hey, I'm here tonight for number 1, or I need number 3. The number 1 reason why people turn to investments, real estate, the stock market, limited partnerships, whatever, is for the income, for the cash flow from the investments. The second reason why people turn to investments is for the tax write-offs. And the third reason why people invest is for the growth, the wealth, the riches, something down the road. Now, these are the three reasons for investing, the three benefits of ownership. Now, real estate has been so popular because with real estate you can get the cash flow, the tax write-offs, and the growth all at the same time, and you don't need a lot of money to get started. To do so in the stock market, you would have to buy one type of investment that produces income, possibly another type of investment that produces tax write-offs, and yet a third investment for the growth. Sometimes you can get a mixture, but basically you get all three of them in the stock market by buying different investments. Now, let me get you to raise your hands here so I can kind of get a feel for those of you sitting here. How many of you sitting here right now need more cash flow, more monthly income? Anybody here? By the way, don't feel bad about raising your hand on that question. J. Paul Getty was the richest man in the world when he died, and he had a pay telephone in his home for his guests to use. I mean, we all need more cash flow. How many of you need more tax write-offs? Now, here's the important thing. How many of you need how many of you need more growth for your future? But here's the important thing. How many of you need all three of them right now? Now, there you go. But seriously, of these three things, which one should you concentrate on? Which one should you go after first? Cash flow? Listen, if you had more cash flow, could you buy tax shelter type investments in the future? Heavens, if you had more cash flow, can you just go ahead and pay your taxes? See, I'm seeing all these people going to these tax shelter type seminars. My goodness. How many of you sitting here right now wish you had a tax problem to worry about? All right, so let's get you rich first, and then we'll solve that tax problem later on. All right, cash flow. The whole thing is about building up cash flow. All right, let's go back to rolling stock. This was my first strategy. Now, there are some things that make rolling stock work. There are some rules. This is a formula. It's just like our bodies operate off of formulas. If you feed your body foods, it gets sluggish and goes away. If you feed a car the wrong kind of food, put in the wrong kind of fuel additive or the wrong kind of whatever, your car doesn't run right. A high-powered, like the Indianapolis 500 race cars, racing on typical gas. They don't. They've got a high-powered, a mixture of kerosene, and they have like a jet fuel type gas. My wife and I have Arabian horses. We breed Arabian horses. You know that we pay more attention to that our horses get, the certain kinds of feed and the mixtures of the feed, than we pay attention to what we feed our own children. Our own children, especially our teenagers, eat junk food all the time. We would never feed our horses junk food because they're high-performance Arabian horses, high-stepping, high-strung Arabian horses, and we want them there so we can win in our shows and breed and have a good breed. You see the point? It's formula. Everything in life comes down to a formula. You know, we kind of want to reject that all the time. And by the way, I personally believe that God has rules. We can ignore them if we want. We can read them but they still exist. And the more formulas we learn, the more we learn to love God's financial laws, laws for our body, the more laws we know, the better and the happier we'll be. So tonight, I use rules that go with rolling stock. There are three. Now, I'm going to show those to you in just a minute, but I want to show you one more example so that when I get to rule number 3, it will make more sense. I love to movies. And I was in Southern California teaching some seminars, and I go to about 1 or 2 movies a day. I love going to movies. People at my office staff always wonders where I am in the afternoon, and I'm at the movie. They want me to sign checks. They come over to Kent 6 Cinemas, and there I am. They can come watching the movie, and I'll sign the checks. Movies. And I pick up the kids, do all that. I go if I can. I usually hit 3 or 4 or 5 a week right now because I'm real busy. But I love movies. I was going into this movie theater, and I saw these runway lights down the aisleways. Remember those? I mean, you know, there was these runway lights, and there was lights up on the walls. I said, wow, this is really a cool. We didn't have them in Seattle. We didn't have them in Phoenix. I was in Southern California. It was a Cineplex Odeon theater. How many in theater? Cineplex Odeon. They were one of the first ones that got all this glitzy stuff. Looking. This is a Canadian company, the New York Stock Exchange. I said, man, I wonder if this stock is publicly traded. Because if this is going to expand around America, I want to own this stock. So I called up my stockbroker. He checked out Cineplex Odeon. Sure, the ticker symbol is CPX. I said, what's the stock going for? He said, $3. I said, buy me $1,000 like this company. $3. I thought that was really cool. $3. Man, I thought this is going to be a $100 stock someday. Well, it's not. It's now a $2 stock. Okay? But let me tell you what happened. I bought $1, and sure enough, just like all my, when I was teaching my seminars on real estate, I used to tell people, hey, you want to make a lot of money in the stock market? Watch what I do and don't do it. Because I had nothing figured out at all. I needed to spend time to figure out how to make money in the stock market. I bought a bunch of this stock at $3, and sure enough, within 2 days, it was down to $2.50, $2.50. And then I started thinking, here I go again, losing money. But I started watching it. Every couple of days, I'd open up the newspaper, and I'd check Cineplex Odeon, and it went to $2, $2.50, and then it would go up to $3.50. And then it went back down to $2.50. A little bit later, it was up to $3.50. Sometimes they even hit $3.25. Then it'd go back down to $2.50, once in a while down to $2.25, and then right back up to $3.25. Man, I said, the next time this sucker hits $2.50, I'm buying it. So I went down to 2.5. I bought 1,000 shares at 2,500. Now let's figure out the numbers here, because a lot of you maybe don't have a lot of money. You may have a limited amount of money to get started. So I bought 1,000 shares at $2.50. That's $2,500. You could buy 100 shares, 200 shares for $500 if you don't have that much money. So I bought it for $2,500. The stock climbed up to 3.5, and I sold it for $3,500. After all the commissions and all that, I made $910. Now, $910 on a $2,500 investment, again, for about 4, 5, 6, 7 weeks, is that an okay return? And then it went back down to 2.5, and I'd buy some more, go up to 3.5, and I'd sell it. I have done Cineplex Odeon now for just about 8 years. Now, sometimes the range goes down to around 2 up to 3. Once in a while, it even drops down to 1.5. When it drops down to 1.5, I load up a whole bunch, and then I sell it at 2, 2.25. I make 50 to 75 cents. Now, is a 75-cent return on a $1.37 investment or a $1.50 investment, is that an okay return? And I've been doing Cineplex Odeon. Now, let me tell you my next one. My wife, see, I hadn't figured out yet that I could go specifically looking for companies that were doing these rolls between a certain range. But after this next one, I started thinking, I could get used to this. I'm making so much money doing this. I made a couple $100,000 one year on Cineplex Odeon, starting with about $10,000. I started thinking, wow. I started with about $8,000 on America West Airlines right before it came out of bankruptcy about 3 years ago, and I made $220,000 in 1 year starting with $8,000, just on rolling it. Sometimes on America West Airlines, I buy it at $1, I put in the order to sell it at $2, it hit $2 that afternoon. Can some of those cheap little stocks do that, by the way? Especially when they're bankruptcy and they're coming out of bankruptcy and all that new stuff's going on. My wife likes yogurt ice cream cones. Now, gentlemen, I want to address you for a minute. I think that women like to have their own money. Ladies, can I talk to you for a second? Yes or no? Do you? Women are always worried about what's going to happen to the men in their lives. They're always worried about that. They're going to take the money out of your pocket anyway, so you might as well help them. If they want to have their own portfolio, start buying them stuff. Start helping them get their own portfolio, their own batch of investments. Now, I don't know what you do for your wives on Mother's Day and birthdays and all that. I buy my wife flowers and candy just like everybody else, but then I also buy her like 50 shares of stock in something. I used to buy her Disney, 10 shares here and 20 shares there, 50 shares, 100 shares. I bought her Disney, but then as soon as it got up around $60 a share, it got really too expensive to buy her 100 shares, for Mother's Day. So I started buying her Euro Disney for about $2 a share, $3 a share. And for a while, she didn't know the difference until she said, what is this Euro Disney stuff? And I said, well, it's another company owned by Disney. Well, anyway, so I started buying her all these stocks. I bought her TCBY. Y'all heard of that one? The country's best yogurt. She likes those ice cream cones. And I bought her stock, 50 shares. And by the way, she still has some of those original stock certificates. She loves it because she gets this TCBY, and every quarter they send her a little dividend check, $2.50 or $15, whatever. They send her this $2.50 dividend check, and in the envelope with the check is always a little coupon for an ice cream cone at TCBY. So you can take it to any store and redeem it for a banana split, all right? So she loves this stock. She'll probably never sell it because she goes all the time. All right. I started buying TCBY at $6 a share. As soon as I bought it, it went right down to 5.5. But then it started rolling. 5.5 up to 6.5, back down to 5.5 up to 6.5, and it just kept going. And I had another rolling stock. Been doing TCBY once in a while, dipped half up the range right there between 4.5 and 6.5. It's been there for over 7 years. 7 years. These companies get to be your friends. You know when their quarterly reports come out. You know you can look at their sales numbers and what's going to happen to the stock. You can load up when it gets cheap, sell off when it goes back up a little bit. By the way, can you even make 50 cents profit on this and still make some good money? Now, usually we make 75 cents to $1, but even at 50 cents on a little over a $5 investment, every 5, 6, 7, 8, 9, 10 weeks, is that a fair return? A 10% return in 9 weeks? Not bad. Not bad. It's just making money. Now, let me tell you one of the things that makes this so powerful to me. I don't think any of you realize how much I really, really dislike losing money. I may make money on 18 trades, and if I lose $600 on one trade, I'll worry and fret about that $600 for weeks. I get home at the end of the day after losing $800 on a trade. Even if I made $18,000 that day, if I lost $800 on one, my wife will say, what's wrong? I say, I lost $800. Well, you can't come in here yet until you get out of that attitude, and I don't want you affecting the kids. Man, that really affects me, because I hate losing money. So a lot of what is designed to not lose money, because I dislike, anybody agree? I mean, it's kind of like, I heard about this, I think it was Woody Hayes, this famous basketball coach that said, no, he was a football coach. There was a famous basketball coach that said, the way to win basketball games is to not lose. Right? I mean, not lose. Don't do what it takes to lose. If you quit losing, then you can finally start winning. Has anybody ever seen that? I mean, my beloved Sonics here, you know. It's like, I guess, someone slapped somebody on that team, right? It's like they go 3 great quarters and they just die. That's the 4th quarter. It's like, so they do what it causes to lose. They got to quit losing before they can start winning consistently. Same stock market. You got to quit losing. Losing, certainly, we're all good from time. I mean, they just don't do what you want, right? You think it's going to go from 13 to 18, and it goes from 13 to 12. I mean, that happens to all of us. But we can minimize those losses by studying the stocks, checking the fundamentals, following earnings, and doing what is important and what is right. Now, I'm going to go now through the rules of rolling stock. There are 3 rules that govern this stock market concept. Here we go. Rule number 1. You should be in your brochures right there. You just write these down. Rule number 1 in rolling stocks is this. Always exit before you go in the entrance. You buy a $2 stock hoping it's going to go to 100. You know specifically by checking the charts on this stock that it's going to go from $2 to $3, and that's your sell point. You're not waiting for it to go to $5 to $10 to $20 a share. There's other stocks that you do for that. Bottom fishing stocks, stocks that are going public. Other stocks fit that new model, but in this model, in this exit. And by the way, as soon as you buy that 2.5, you could even on the same phone call tell your stockbroker, now I want to sell those 1,000 shares of stock or those 500 shares of stock. You could put in your order on the same phone call, so as soon as it hits 3.5, you're out, right? Then you know about it. They'll send you a confirmation slip. Then you buy it again at 2.5. You sell it at 3.5. You always know your exit. Now I'm going to show you some charts. Now I use Telechart 2000 as a chart that gives you. You can go back 1 year. You can go back 5 years. This only costs like $29 to get started and like $20 a month maximum. And you can download thousands of charts to your computer for just pennies per chart. I mean, it's one of the cheapest things you'll ever do. I'll show you one right here, for example. This company is called AG Associates. The ticker symbol is AGAI. Now, when you learn how to read these, there are several other charts that you can get to about this company. But you can see the volume of the stock. You can see over here whether it's optionable or not, what exchange it trades on. Now, in this chart, you can get them grouped by quarters or by months. This one is grouped by the month. Now, this is a stock that's ranged right down here. This is where you'd buy the stock. And this low range is right here. It's about $4.75. And then it goes up to right here, and these top ranges right through here, and sometimes it doesn't go quite there, but these top ranges is right around $7. Now, I'm going to come up with point number 2 in just a minute. Is that a nice roll, by the way? Just a little under 5 to just a little under 7, and there's your nice roll range. So you make almost $2 every time this stock moves. If you were doing this stock, you'd have 1, 2, if it didn't get quite as low, but 3, and then you'd be waiting for your 4th one right now. So in the last 9 months, one moved. So $4,000 would have become 1,000. Then 4,000 again, another 6,000. Or you could take the 6,000 and turn it into 8,000, or whatever, however many shares you buy. This is a $4 or $5 stock. This is what we call a rolling stock that shows you a pattern. Now, let me show you a couple more. This one is an unusual chart because it drops so violently. It's almost like it's newsy, and then it just drops like crazy. This stock goes down here around $4 a share once again. It climbs up to around 5 and then drops. Goes up around 5, 5.25, and drops. Back up to 5 and it drops, back up to 5 and it drops. Okay? Now, there's not really a strong down pattern here. It just goes down violently. Every time it hits around 5, it's like somebody comes out with news and it drops a whole $1 within a day or two. And then as soon as it gets down around 4 again, in these low levels, that's when you start buying it again. All right? Now, I'm going to show you rule number 2 as we move along here. Now, I'll show you a couple more charts in just a second. Rule number 2 is back to thou shalt not glean the field. It is don't get greedy. I'm going to go back to Cineplex Odeon for a second. We're doing our Wall Street workshop. Let me just briefly tell you about that so you know what we do at the Wall Street workshop. There was a gentleman sitting right over here named Kirk. And at the Wall Street workshop, it's an experiential learning formatted seminar. Now, it's hard to explain what that is because, you know, in explaining things, sometimes you can always use something else. It's kind of like it tastes like chicken. You know, you're eating rattlesnake and it tastes like everything tastes like chicken. Or if you're driving in a car, oh man, this car is just like a Lincoln Continental. Well, maybe it's a Cadillac, but see, you always got something to compare it to. When we talk about the Wade Cook Wall Street workshop, there's nothing to compare it to. There's absolutely nothing to compare it to. How would you like, by the way, how would you like to get together with me and or my instructors for a couple of days and do a whole bunch of deals like this and just make a whole bunch of money sitting there? Come on, where are you guys? Help me out here. Okay? How would you like to seriously get the stockbrokers on the phone? So maybe I'll explain rolling stock, but then just instead of explaining it and letting it go there, how about if we get a stockbroker on the phone or calling in on deals that we did maybe last week, we all go ahead and buy a bunch of stocks this week. And we get ready and we show you, okay, we're buying this one at 3 and we're going to sell it at 4, and we put in all the orders and you get to see it done. Would you like to hear me or my instructors carry on calls with the stockers? Then as soon as we're done with that, see, that was step 1 and 2. We tell you how to do something, then we show you how to do it. We literally let you watch it being done, and then we excuse the class and you all go out and get on your phones. And whether you do the deal or not, you at least need to go out on your mobile phones, cellular phones, or out in the hotel hallways and get on a phone and call your stockbroker. Whether you want to buy the stock or not, you at least need to call and get prices. And for some people, that's a real experience to finally call their stockbroker. Say, okay, what is this APAI going for? And you check out the stock and you get the prices, right? Is that a nice experience? Now, if you want to do that, that's up to you. Then we come back in and we analyze it, we think about it, we talk about it, and then we explain another strategy. Now, at the Wall Street Workshop, we have 11 different cash flowing strategies. 7 of them are major strategies. 4 of them are minor strategies. Of the 7 major strategies, we use that exact 3-step process. We tell you how to do something, we show you how to do it, and then we watch over you and we go do it and see it being done. Does that sound cool, by the way? It took me a lot to come up with this format because it is so easy just to get up and lecture, right, for 2 days. But I don't think that's what you need. Let me tell you what, if you decide to come to a Wall Street Workshop, what you will not get. You will not be coming to a motivational seminar. There's nobody up there that's going to tell you how to be one with the universe. There's nobody up there whirling and twirling on the stage, getting you all excited about stuff. This is a hard-hitting, industrial strength financial seminar to show you how to take a little bit of money and make a lot of money with it. Let me tell you what else you won't get there. You won't get sold any investments. We have no investments for sale. You open up your own brokerage account with your own stockbroker. You come, you learn how to do the investments. You do them, you make the profits, you benefit. We get nothing out of what you do. But take a little time out on that. How would you like to finally have an educator in your life that gets nothing out of what you do? Now you think about that. If you come to a typical Dean Witter, Merrill Lynch, anybody else's stock market seminars, what do they all have for sale in the back of the room? Their latest limited partnership, their latest mutual fund about some jojoba farm or aloe farm in southern Arizona, and you're going to buy units in this partnership. I want to go and get pure, unadulterated knowledge and learn how to apply knowledge. Nobody ever does that. So, and at the Wall Street Workshop, it is an experiential learning where you can come with your own money and your own brokerage accounts and learn how to do the deals. And we got charts and we got a charting service. This Telechart 2000, we usually have 2 TVs on each side, and so everybody in the audience can see the TVs and see the charts. And as soon as we say, okay, let's look at General Motors or let's look at Ford, boom, within a couple seconds they punch it up, and that latest screen comes up there with the chart so you can see where it's been and all that. And we talk about balance of power, and we show you how to use Telechart 2000, but we get there and do the deals. Right now, a good 30% of the class, sometimes up to 40 and 50%, make the cost of the workshop back within the 2 days that they're there. By the way, what would you pay for that? I mean, I'm not asking you to sign up for it right now, but what would you pay? If somebody could show you how to make $10,000 extra a year, what would you pay them for that? Time out. What if somebody showed you how to make an extra $10,000 a month? Take $5,000 or $10,000. Let me give you an example. We haven't got there yet. I'm going to show you this one after we take a break after a while. I'm going to show you a strategy called writing covered calls. In writing covered calls, you will make between 18 and about 42% a month. Average is probably 23, 24% a month. Let me tell you what this means. If you have $10,000 to invest, that money should generate $2,500 a month. Now, can I take time out on that month there? It doesn't matter what I say, and it doesn't matter what I write on here. Your mind heard year. Your mind heard annual. The first thing I got to get you to do, if you're going into a cash flow millionaire instead of a cash flow slug, is to get rid of the word annual from your vocabulary. There's no more annual at all. When you hear Wade Cook talk and my instructors talk, we talk about 3-week returns, 22-day returns. And by the way, how about if you could get this kind of return every month? By the way, how long does it take then to double this money? If you can get 20, 25% a month, in 3 or 4 months, $20,000. And then you got 40, then you got 80, then you got 160, then you got 100, then you got 600, then you got over $1 million in about a year, year and a half. The other day, the Delta airline flight attendant started with around $5,000 a year ago, and she just hit over $1 million. Got this great big huge 400-pound guy from back in New Jersey, started with his name's James, started with $4,800, and 9 months later was at $1,020,000. Now, I don't know what kind of rates of return you're getting on your money, right? And by the way, some of my students are, because they have more time to do it, are even now doing better returns and getting better returns than I am. But that's phenomenal stuff. And you get it, you get those kinds of rates of return by learning how to be dedicated to a principle, dedicated to a formula, learning it, getting to be an expert at it, working it until you get it down. Rolling stock is one such formula. It's not going to make money that fast. This formula is called writing covered calls, which we'll be to in just a minute. By the way, is that a pretty good return? Could some of you live on $2,500 a month? Where are you? No? Okay, if you can't, then let's scrape together 20,000 bucks. And that'll generate $5,000 to $6,000 a month. Now, can you live on $5,000 to $6,000? There you go. See, a lot of you in this room right now are about 1 week to 5 weeks away from retiring. Literally being able to walk in and tell your boss, I'm sorry, I'm not showing up on Monday, I'm out of here. I have learned how to take this kind of money, and I am making $5,000, $6,000 a month. Let me tell you about Jared. Jared is he's now 14, a 13-year-old boy that came. His dad gave him $2,000, and he's been generating about $400 to $600 a month off of the $2,000. Now, is that a pretty good rate of return? 20% a month, just like what I've been telling you. Now, his dad's boss wants Jared, 13 years old, to manage it. He's got $80,000 and wants Jared, the 13-year-old, to manage his money. Because his stockbroker is getting him a whole whopping 5% and 6% a year. Now, if you want to get annual returns, go for it. I mean, just read all these other boring books, and I think you should read every book on the stock market you can. There are wonderful books out there. You can walk into any good bookstore and find great books on the stock market. Boring as can be. I mean, this is the only exciting stuff out there right here, right? But this other stuff is boring. You read this stuff, man, I'm telling you. In these other books, I read them all now. You got to read 30, 40 pages to get one good idea. Here, you're going to get 3 or 4 good ideas every page. Whoa. Every page, you're going to get 3 or 4 good ideas. All right, this is writing covered calls, getting returns. Now, I want to return now to the story of Kirk. He was sitting in the seminar and on the first day, and I had mentioned with Cineplex Odeon that I had rolled it between 2.5 and 3.5, or 2.5 and 3.25, about 15 times. He went home, and he came back the next day with a chart, and he said, Wade, there is no way you could have done this 15 times. He was challenging me in front of the class, which you can't do because I only tell real deals, what I actually do. I had gone home that night when I got challenged the day before. He said, I'm going to go check this out. I went home and found out that I had done it. Well, I'll tell you in just a minute what I done. Here's what his chart said. He ran a chart back 4 years. He said in this chart, he said, see, this stock has gone like this. You know, this is like the high and close, high and lows every day. He said this stock only got up to the $4 range. Remember, this is Cineplex Odeon. Remember that theater chain I was telling you about? It only got up to the $4 range. It's high about every 6 or 7 months. It only hit $4 every 6 or 7 months. I said, Kirk, you missed the whole point. What was the point? What did I tell you tonight that we were trading Cineplex Odeon? You buy it at what? Remember? 2.5, and where do you sell it? At 3.5. You see that? He didn't get it. He said it only got up to $4 every 6 or 7 months. And I said, but Kirk, you missed the point. I never said to sell it at 4. By the way, I did one time sell it at 4 because I forgot to put in my order. And when it hit 4.25, I said, whoa, sell the thing. Because I forgot to put in the order one time. But that wasn't my point. My point is I sold it usually around 3.25, 3.5. And I said, you missed the whole point. Don't get greedy. Right? Don't get greedy. Don't try to sell it at 4. I said, you go home again and you check how many times this stock went from 2.25 up to 3, 2.5 up to 3.5, where it went up 75 cents to 50 cents, to a dollar. 75 cents to a dollar. How many times did it do that? He came back and he said, it has done that. And by the way, I went home and checked. Instead of 15, I had done it 16 times. He had checked, and it did it 38 times. Now, I'm very busy running a company. I'm very busy with all that I do. And I did not catch all of those. After I'd sell it, I'd wait sometimes 3 or 4 weeks, then I'd buy it again, instead of getting in my orders. Sometimes it would go from 2.5 to 3.5 before I ever got it. Before I ever figured I was back up to 3.5 again, and I missed the roll. I missed them. I only did it 16 times. Let me just, are you thinking about this? What I just said, everyone, is if you had started with $2,500, you could have made $750 to $1,000 on your original $2,500. In a little over 4 years, you could have made that kind of money 38 times. Around $30,000 in 4 years, starting with $2,500, if you were more diligent and you stuck right with it. And even if you missed 5 or 8 of those rolls, even 25 rolls in 4 years, would that still be okay? You see, it's called rolling stock. Now, there's a third rule. We need to cover that one. The third rule on rolling stock doesn't readily meet the eye, but as soon as you see it, you say, oh, I get it, I see that. And by the way, talk about seeing things. I hope what you get out of this tonight is my attempt to help you see things that you maybe have never, ever seen before. New ways of looking at the stock market, new ways of looking at your money, so that your money becomes a powerhouse, your money becomes a machine that generates income for you. See, I think in life, I think you've already realized this, if you work for someone else, you work your own company, you go to work and you trade your time for money, right? You trade your time for 2 weeks and you get a paycheck. At some point, that's earned income. At some point in time, you got to start switching out of that earned income mode into the unearned income mode. That could be from rental real estate. That could be from dividends from stocks. That could be from limited partnerships, investments and things like that. You need to get more unearned income. By the way, how many of you wish you had all kinds of unearned income? You didn't have to worry about earned income anymore. Anybody here? Well, that's where we're trying to get you to go. We're trying to head you down that path to learn how to make money. Capital gains, dividends. Get your money earning money for you. And those are your two choices. You either go to work and work harder. And by the way, I remember this joke when I was driving bus down in Tacoma. The way you make $1 million driving a bus, drive a bus 1,000,000 hours. And it was true. I mean, I was trapped into those jobs just like most people. You get trapped in that job, you start trading your time for money, and as long as anyone controls your time, the time you go to work, the time you go home, when you go on vacations, when you don't go on vacations, when somebody controls your life that much, you are not going to get rich. Have you all figured that out? You're going to get rich when work becomes fun, when your money gets working for you, and your money starts earning extra money for you. And that's when life really becomes fun. Then you can live the lifestyle that you really want to live. Then you could pay more money to your... How many wish you could give a bigger tithe to your church? How big? I mean, some people pay like $1,000 a year to their church. How would you like to be able to give $10,000 a year to your church? How about $100,000? How would that be? Where are you guys? I hope I got you thinking. These churches that you see around these neighborhoods, they're built with a lot of faith, but they're also built with a lot of hard, cold cash. If you can do that to help your missionary programs and churches being built and neighborhoods being fixed up, then why not dedicate the rest of your life to doing a lot of good in your community? What do you need to do that? Well, you need a good attitude, that's for sure, but you also need some money. If you can get a little bit more money coming in, then you can do some really good stuff with it. All right, let's continue. The third rule of rolling stock is to do it with cheap stocks, the small stocks. Now look at this. See, if you buy Motorola at 50, and if that stock goes to $51, you've made $1. But what if you buy a cheap little stock for $1 and it goes to $2? You still have only made $1, but what's the point? You've doubled your money. You got started with, if you want to buy 1,000 shares, instead of $50,000 on Motorola, you would have $1,000 on this cheap little stock. Okay, let me show you a couple of such stocks. Here's a couple more let's see, I already did that one. Here's a stock that goes down around $3.50, actually about $3.25. This is the $3.25 range right here, and then this is the $4 range right here. So it's only 75 cents, but it's a 75-cent return every 3 or 4 months on a $3 purchase, a nice return. Rolls up, rolls down, rolls up, and rolls down. Let me show you another thing to think about. You see, in this one that I just showed you right here, that's a nice chart. It's a nice thing to look at. Let's go back to our $2 range and our $3 range. I learned a long time ago in real estate and other business enterprises that I would rather want what I don't have than have what I don't want. Anybody ever had something that you don't want? I mean, I had rental properties that I didn't want. Too far away, I took them where I shouldn't have gotten them, but they were a good deal, I thought, and they caused nothing but heartache. See, everybody wants a stock when it's going up, but nobody wants that stock when it's going down. So now think about this one. If you have a stock that goes from $2 up to $3, and then it goes back down to $2, and back up to $3, or $3.25, then back down to $2, and back up to $3. Everybody wants it when it goes from $2 to $3. Nobody in this room wants to buy a stock at $3 and have it go down to $2. So, where do you own this stock? Every time it gets down around $2, you own it. So you own it here, and you don't own it here. You own it here as it's going up, and you don't own it as it's going down. That's another way of saying rolling stock. You find the roll ranges when it peaks out, when it hits that resistance level, and that's when you sell. Even if you sell it at $2.75 or $3.25, you sell it. You don't own it as it's going down. You own it as it's going up. Does that make sense? then you just need to find more of these and continually find them. Because sometimes they only roll for like 6 to 9 months. The point, again, for point number 3, is that you need to stick with these cheap little stocks, especially for those of you that don't have very much money to get started. The cheap little stocks will help you get going, and then you don't need a lot of money to get going, and they keep rolling. All right. Now I'm going to move on. I'm going to tell you now about another strategy. I'm going to just share with you 2 or 3 strategies tonight. The next one is going to be one of my favorites. Now, rolling stock, when I first started doing stock market investing, was my favorite strategy. You know why? Because it was my only strategy. It's the only thing, because everything else I was doing just wasn't making any money. Now, again, what I'm trying to get you to see with rolling stock is something that maybe you have never seen before. Is this almost contrary to everything your stockbrokers are telling you? Because they're saying, buy this mutual fund and hold on forever. For some people, at certain times in their life, maybe that is a good strategy. You ought to buy this good blue chip stock. I agree. Here's the problem. A lot of you hear about, a great company like Chrysler doing a stock split, and you want to buy it. Or you hear about General Motors or Ford or AT&T or Disney or any other company. You say, man, I wish I owned some Disney. Man, I wish this I got a feeling about Microsoft. How many wish you had about 10,000 shares of Microsoft 15 years ago when it first went public? Anybody here? Because that 15,000 shares would now be a whole bunch of shares. It's done like 9 stock splits. Even just in the last 2 years, the stock, when I first moved back up to Washington, the stock was at $94. Well, it's actually about 80. And now it's a 2-for-1 split. Went up to 94. Did a stock split down to 2 shares at 47. Those shares climbed back up to around 100, 120, and announced another 2-for-1 split. Between the time it made the announcement, the time it split, it went from 120, your 2 shares, up to 160. Split down to 2 shares at 80. Now you have 4 shares. You all together here, 4 shares. And it's back up to $123, just 5-6 months later. Amazing. It's like defying gravity. Here we live in the Northwest, and all of you that don't live in the Northwest, you can still buy Microsoft. Do you guys realize that Microsoft, at the stock price it was at today, becomes, as far as market value, the value of the stock became the 3rd largest company in America? Only General Motors and General Electric are bigger than Microsoft. Is that amazing? Here in the Northwest, Microsoft is bigger than Boeing, is bigger than Starbucks, Albertsons, all about 15 other companies combined. Microsoft is bigger than Boeing. And they make the jumbo jets, and Microsoft makes software programs. It's bigger than Boeing. I mean, think about that. Now, there's something to learn here. Now, I hope what I'm showing you is a different way of looking at your money. Helping you see some things that maybe you've never seen before. By the way, talk about seeing things you've never seen before. Did you hear about the guy that has his own business? He's trying to hire a new employee. He only has 1 ear. He wants to hire a new employee, but he wants to hire somebody who does not know that or does not realize that he only has 1 ear. So he narrows it down to 3 people. He brings in this first guy for an interview, and after the end of the interview, he says, what do you notice about me? The guy goes, well, you only have 1 ear. He brings in the second guy. What do you notice about me? Well, you only have 1 ear. He brings in the third guy. He really likes this guy. He wants to hire him. And at the end of the interview, he says, what do you notice about me? The guy goes, well, he looks across and goes, well, you wear contact lenses. And the guy goes, oh, good. Finally, somebody does not notice that I only have 1 ear, so he hires this guy. Weeks later, his curiosity is killing him. He goes out on the shop floor and he goes, look, it's really been bugging me. How did you know, sitting that far away from me, that I wear contact lenses? And he goes, well, it's easy. You can't wear glasses. You only have 1 ear. Trying to help you see some things that most people never, ever get a chance of seeing. Do you realize, had you not come here tonight, had you not read one of my books, that you would probably have never known about rolling stock? Here is a plan that can make tens of thousands of dollars a year, not as rapidly as options in a few other plays, but very predictable, hardly ever lose money. If you get your roll ranges down, you buy at the low part of the range, which is a good bear market strategy, by the way, always buying on dips. So that's one of my strategies in bear market baloney, is on how to buy on dips, how to buy wholesale, how to buy them low, kind of use the bear market mentality, the stuff that drives the news and all that. Now, talk about seeing things you don't see. That's what this is about. In this next little while, I'm going to show you another strategy. It's my favorite because it's one of my favorites because it forces the issue of putting the emphasis on the exit, on selling, and on capitalizing on a profit very rapidly. Again, I'm assuming, I asked this question before, that a lot of you want to build up your income. So let's say you've got that General Motors stock that you want to buy. Man, you want to buy $10,000 worth of it. Where do you get the money? For most Americans, if they could scrape together $10,000 to stick into one investment, their money is gone. Right? And whether that stock goes up or whether that stock goes down, whether that stock pays a dividend or not, you are out of control. Here's my point. You cannot get rich being out of control of your money. Now, if you start up a business, or I don't care whether it's sheetrock or sheet metal, and you make a lot of money, and that's where you're going to make a lot of money, by the way, is being in business. That's why I keep talking about treating the stock market like a business. Be in business. Now, think about this. If you were in business and you had a 7-Eleven store, you would not go down to the wholesalers looking for food and look at the pepperoni sticks and the chips and all the things you're going to buy for your store and say, wow, I like all this stuff here. I want to buy a whole bunch of those whole pepperoni sticks and all that other stuff, and I'm going to hold on to it for my retirement. You would not do so, would you? If you have a store, what is the one criteria when you're looking at something to buy to put into your store to resell? What do you want it to do? Move fast, get out of there. Just move it and get it out, right? That's how you run a store. Then why not for a while, with certain amounts of your money, treat the stock market like that? That you buy specifically so you have something to sell. And you only buy that which will sell very quickly. You buy hot things that are going to sell as soon as the pressure cooker drives it up or whatever, and you get out of it and you sell it. Now, let me tell you a fundamental key to making money in the stock market before I go on and show you this next one. There are two characteristics that you need to have if you're going to follow the Wade Cook formulas and make a lot of money, a lot of cash flow style money in the stock market. There are two things that you need to have. Some of you don't have those. Some of you should not come to my Wall Street workshop because you'll make too much money. It'll freak you out. You're going to get so sick of me because you're going to have to pay 40% of it in taxes, and all of a sudden you're sitting there paying $40,000 in taxes, and you're going to get angry at me because you're not ready to make that money. Most of you are not ready to make the kind of money that I can help you make. There are two characteristics. Number one, if you're going to make a lot of money in the stock market, you have to, number one, be right more than you're wrong, and number two, act quickly. And most people do not have what it takes to do that. Most people will buy something and hold on to it forever. They'll analyze it to death. They'll think about it, whether they should buy, whether they should sell, and they'll never actually do the deals. We try to overcome a lot of that at the Wall Street Workshop by having you do real deals and paper trades. And I really recommend, until you catch on to my formulas, if you don't want to do it with real money, because there may be a chance of losing some money until you really figure it out, then do a paper trade. Call your stockbroker, buy it on paper, track it, follow it, then sell it on a certain day, and see what kind of money you can make. It may take you 20, 40, 80 deals before you finally say, hey, I think I got this thing down. Hey, I'm going to go do this with real money right now. Next time this stock gets down here, I'm doing it with real money because I've got this figured out. Whatever it takes to get to the truth of things. Knowledge is shifting. Knowledge changes all the time. As we get smarter as a people, knowledge changes. Truths are always the same. We need to come to a knowledge of the truth of some of these things. The truth is that the stock market will always go up and down. The truth is, when you got guys in the federal government like this Greenspan guy that talk about irrational exuberance, I love irrational exuberance. I thrive on irrational exuberance. I want stocks running up for no reason and going down for no reason, because every time they take a dip, we jump back in. Everybody says, well, God, the stock market went down 150 points. I said, yeah, these are the days we dream about. We love these days, because then we jump back in and ride it back up. Nobody knows what to do when the stock market's going high. Microsoft, 115, 120, 125. Man, I sure wish I'd take a dip, and then I'd buy some. Right? We all say that. So we wait for the dips. We buy on dips. Okay? It's just an old stock market adage that says you buy on weakness, sell on... In stores, we call it buy wholesale, sell retail. By the way, what Joan Rivers said? Joan Rivers on her TV show. Buy wholesale, sell retail. Buy on weakness, sell on strength. Now, we're going to employ this strategy here in just a minute. But let me just ask you something. I just gave you two keys to the stock market, to making money in the stock market. Now, together, a course. I'm going to just briefly tell you about it. I read work. The definition of a workshop is usually a small group of people that do hands-on experiential type things. That is a workshop, whether it's a woodworking workshop, a flower arrangement workshop. Can you imagine going to learn how to do ikebana, you know, the living flower things that they do with a pair of scissors and cutting them? Where do you learn? Can you imagine taking a motorcycle repair class and showing up and having a bunch of manuals and staring at a bunch of pages? If you want to learn how to repair a motorcycle, what do you need? A motorcycle and some tools to work on it. Can that become a real workshop? The guy's got to fix his carburetor on this old Ford. Don't get me wrong, I love books. I write books. I want you to buy my books. I want you to go to the bookstore and buy them so I can keep getting bestsellers, right? I like books. But if books made people rich, librarians would be the richest people in the world. And they are some of the poorest people in the world. So obviously books is not the answer, though they can help, though they can get you on track. I can count the amount of people that have read my books, have come up to me at different seminars as I travel the country, that are really, really successful. I can count that amount of people who have just read the books on one or two. I cannot begin to count hundreds and hundreds and now thousands of people who have 3-day workshops, who have taken 50 movie producer, took 15,000, then he added another 15,000, and about 6 months later his 30,000 was over $700,000. I got letters like that all the time. It's amazing, but I can't even count them anymore. We're full of testimonials of what people are making. But it comes there and she'll make $10,000 plus per month. You know what though? I can show you to do that. I can invite you to come along and tell you what the tuition is for the class and all that. But most of you will go home and say, well, I can't do this until I talk to my friends. I can't do this until I talk to my spouse, whatever. And I want you talking to your spouse. I don't want to do anything behind my spouse's back. But sometimes I want to make money and build up my family's income. You're going to take an idea tonight, an idea that can make you $100,000, $200,000, $300,000. And you're going to go home and get that idea shot down by somebody who's making $40,000, $50,000 a year. You're going to call your stockbroker tomorrow and say, I went to this Wade Cook seminar last night, or I watched this video, if he does not understand my strategy, what's he going to say about him? They're going to badmouth him. If they're not up on it, they are down on it. Now, soon I recommend you buy 2 of them. One for your stockbroker. Most of these guys are dumber than a box of rocks, and they don't get it at all. All right? Now, you may find a wonderful stockbroker that really understands mutual funds. You may have a guy that really understands specialty. They have done everything they can to pass a license test, right? They've taken the test and they've done that. Hey, what do they know about making money? What do they know? Ask your stockbrokers before they start to tell you what to do with your account. Say, show me your own portfolio. Let's see what you've done. I get these guys that call me on the phone. They call me on the phone and say, oh, Mr. Cook, we got a hot investment. We got your name and we want you to invest in this new company that's going to go public or whatever. How many of you ever had a phone call like that? They want you to invest money. What do? Hang up? Not me. See, I'm too nice. I can't hang up on anybody. I just sit there and listen. I tell you what I like to do. I would like to buy $10,000. Say that. The guy's sitting in his chair, crash on the floor. You have to wait for them to get back up. Then they're huffing and puffing. They say, okay. They don't even know how to take the order yet. But they've been sitting there calling for 18 days. That's their job. They usually make about 30 days. But I want to buy $10,000 worth of your stock. And they say, what I need to do to help me make a decision, though. I need returns for the last 3 years. Well, see, one of the things I teach on investing, one of the things that I'm really into is following the advice of people that are making more money than I am. Okay, let me ask you a question here. I'll come back to this story. How many of you sitting here right now seriously would like to make over $100,000 a year? Raise your hands if you would. Most hands here. Now, I got a question for you. It's a real simple question. If you really want to make $100,000 a year, why are you talking to anybody about making money who's making under $100,000 a year? Advice. Where are you getting your advice? Now, right now, you're listening to a cab driver. I drove cab. I strategies as a cab driver. Money's in the cab before. You can wait. I was down in Tacoma, Washington as a cab driver. I was waiting for that SeaTac $5 run from Tacoma. I was sitting in that cab there driving all over town. At the end of the day, see, every time you get in a taxi, it costs $1.80. Just to get in my taxi was $1.80. And see, all the other drivers are waiting for all these big runs. I was out getting 40, 50 runs a day, all these little dinky $3, $4 runs. At the end of that, I'd have all this money, and they'd have maybe one run, maybe a couple. I was making tons of money. I was making so much money as a cab driver. I was living on about $1,200 a month back then. I was making $3,200 to $3,800 a month. And I was taking about $1,000 of that money and putting it in real estate and fixing up houses and all that. That's where I got started. Real estate was driving a taxi extra weekends to get that money. The money is in the meter drop. In real estate, the money was in the meter drop. In the stock market, the money is in the meter drop. Now, in life, have you ever had one of those experiences virtually as you do in your life? Meter drop principle. Tell you what, if I would invent a new faucet and start getting royalties on it. I don't care what it takes. I want the meter drop. Does that make sense? You want something repetitive. Guys, think about it. McDonald's does not make all of its money every year selling one big, gigantic hamburger. How do they make it? Selling billions of little ones. The key to hamburger in Tampa Bay, like a hamburger in San Francisco. That is the bottom line key to wealth, is repetition. And you can do that with rolling stock. You can do it with some of these other things. It's repetition and duplication. Getting that horse to ride on. Getting something that's going to make you money consistently. Now, I'm going to invite them to the days with my instructors. I don't teach them very once in a while. You need to come. 3% of them, sometimes 50% a month return on their monies. Now, sometimes my instructors lose money, so do I. But overall, so let me tell you about the Wall Street work. And you know what? It's hot in here, and I'm going to have to honor this for everybody watching this. I'm going to give you guys a special discount. Some cameras going on here tonight. I'm going to have to honor this at home. So anybody watching at home, stick with me on this. First of all, I want to say something about a different seminar. We have another seminar, BEST. Let me tell you about that one briefly. BES, Business Entity and Skills Training. This is a seminar where we cover Nevada corporations, the power of Nevada corporations, and why that is really the only state where you should incorporate your little family empire, your family dynasty. We talk about living trust, probably the seminar on living trust, charitable remainder trust, pension plans, pension plans, which are the best. We all like family limited partnerships, which are awesome, especially as they go hand in hand with trust and pure trust. Massachusetts Business Trust. These are seminars where we talk about offshore corporations and offshore trusts, but not at the BEST seminar. This is a one-day event. It is worth tens of thousands of dollars on what will help you save money for reducing your taxes. Now, we put a price tag on this of $46.95, $4,695. I don't want anybody to think it's $46.95. Now, I want to make a comment about this price and a comment about investments in general. We have the two-day Wall Street workshop. Maybe in your town it will be on a Tuesday and Wednesday. We always follow up the workshop with a seminar, which is the BES Business Entity and Skills Training. Do you know that investment seminars, if you go to a seminar for investment purposes, it is no longer tax deductible? But if you go to a seminar for business purposes, to set up a business, to change your business, if you go to a business seminar, more than likely that will be tax deductible. Now, I'm going to include one of these seminars for free. You can pay for one and get the other one for free. Which one would you rather pay for? The one that is tax deductible. Does that make sense? So if you decide to go in the back of the room and sign up for the Wall Street workshop, what we're going to do is sell you the BEST seminar so you can deduct it from your list, and I'll throw in the Wall Street workshop for free. But now let me tell you about the Wall Street workshop. The Wall Street workshop again, let me tell you what it involves. It is a 2-day experiential learning format. We have a workbook that goes, you just need to bring a pen, you don't even need to bring a notepad. You sort of take notes throughout this workbook. And by the way, we do deals. We do deals. Sometimes we get complaints by some of our attendees, like sometimes we make so much money in class, there's so many deals going on, so many companies doing stock splits, good announcements, bad announcements, that sometimes we get a little bit off track. But the instructors, before we ever get going, ask the class to vote on us. If they hear, you'll get the vote. All right. Would you rather sit there for 2 days and learn how to make a lot of money, and actually make a lot of money, or would you rather doggedly stick with the manual and make sure you cover every point in the manual? What do you think? Make the money or stick with the manual? What do you think? Because we try to stick with the manual the best that we can, but right in the middle of a major point, one of our stockbrokers calls and says, oh, we got a 2-for-1 split, or we got a 4-for-1 split. What would you rather do? Finish covering that point in the manual, or you want to jump on the deal and make some money? What do you think? Okay? But some people can't deal with that. There are some people in life that just cannot deal with any amount of chaos at all. They cannot deal with it. Now, so if you're one of those kinds, stay home. Don't come. We can complain at the seminar. This 2-day seminar, everyone, is $4,695. $4,695. Now, we have a couple of specials. Let me just mention why you are going to have to travel to wait. You're 10 trips a month and there's not one coming to your home in months. Why not jump on a plane and head for Dallas or Chicago or LA and get to a seminar? Because every month travel to attend. We have these regional, we have in Chicago, Washington, D.C., Philadelphia, sometimes in Boston, Texas, all over Texas, Southern California. We have them all over the country. Because tonight, a $500 travel discount to help pay for your air in the whole. Now that puts it down to $41, something I'm going to allow. And let me tell you, take it that you don't have to as you can. This is very good to me. A few years ago, I set up a scholarship fund. This is the seminar, even though it's more by Wake Seminars Incorporated, Profit Financial, which is a publicly traded company. It is still my personal seminar to me, and I have a royalty for everybody that comes through. Set aside a scholarship fund to apply $100 to anybody who wants to come to the seminar. And I invite you to take advantage of that tonight. So I will knock off another $500 if you want to do that for the scholarship to come. Right now, we include one youth for free with this course. If you have a summertime Christmas, we have a 2 youth Wall Street workshop. It's just $1,695, or they can come with you as a parent. And by the way, you bring these 14-year-old kids, 16-year-old kids to these adult Wall Street workshops, they understand it better than the adults. There's nothing holding them back. You know, when I was doing my houses, I used to hire all these people to go out and find houses, 40, 65 years old, to go out and find me houses. Let's find 3 houses a week. And they'd take these charts and these maps and they, well, we can't do it here, we can't do it here, well, we can't do that, how to do stuff. Some 2-year-old kid right out of college and say, go buy a house, and they say, what color? You know, they're ready to go. So I think we need some of that adult maturity, but definitely some youthful enthusiasm. And these kids just eat this stuff up. All right, so I want to put that down again. This includes if you want to bring a youth with you between 12 and 18 years old. If they're over 18, then they go into the adult part. So this puts it down to $36.95. This is the price of our Wall Street workshop tonight, if you take advantage of it tonight. Now I'm going to do one more, as I told you before, for you sitting here under these lights, but I'm going to do one more thing. I do this for, see, there's about 100. I'm going to do this for about 10, let's say 12 people. The first 12 people that go do this. Remember I said that the key to the wall, and this is no joke, guys, I'm seriously doing this. The key to the wall, to making money in the stock market is to be right more than you're wrong and to act quickly. I'm going to do one more thing. By the way, before I do that last thing, would anybody here like a guarantee that it works? And if it doesn't work, you get your money back? Yes or no? I am so proud of our guarantee. Watch this. You tell me if anybody in this whole country has ever come up with a guarantee like this one. I am so confident of my ability to help you make money. And again, I get nothing out of what you do. I don't get any percentages. I get none of your profits. I get no money. You pay me for an educational fee, and you get to keep all this, and I have no guarantee. It's really three things. Number one, at the Wall Street workshop, during the 2 days there, or within 3 months afterwards, so this is a series of threes, within 3 months of the Wall Street workshop, we will show you 3 deals, 3 transactions, wherein you will get at least a 300% annualized return. Now let me tell you what that is. Let's say you buy an option, you sell it 10 days later, you get a 28% return for 10 days. You take that, divide it by 365 times this, and you get over 300% annualized return. You will get over a 300% annualized return on, and we'll show you these 3 transactions, and if we don't, I will take the burden. If we do that to you, you get your money back. What do you think? You find me anybody who has ever come up with a guarantee like this that takes all the burden of producing on themselves. Find me one company that ever does this. I want to say that our seminar is the best, the number one, the best seminar in the country. But I turn around, there's nobody in second place. Nobody's even doing this. Nobody has ever developed an experiential learning formatted seminar where you do the deals, make money in class. See, it's sort of that, actually doing the deals. How many of you sitting here right now, I know that some of you, I've seen your faces before. How many of you have been to the Wall Street workshop? Raise your hands if you have. Would you recommend anybody else? Georgia? North Carolina, close enough. All right? Where did you get out? Did you see people making money at the Wall Street workshop? Bunch of money. Did people around you actually make real money? They were doing real? Okay, who else came to the Wall Street workshop? Was there somebody over here? Who else was over there? Yes? But you saw other people making money? So you need to set up your brokerage account. See, one of the things you need to do is get your brokerage account set up before you come, because it's kind of fun to sit there and watch everybody else make money, but then you're just kind of like the wallflower there, you know. It's like, I want to dance too here, you know. All right, this is the guarantee. Now let me do this one last thing. Remember to act quickly. For the first 12 people that get up right now and go back there, if you'll go back there, I am going to knock off $1,000 more off of this. So it'll be $26.95 to the first 12 people that go back there and sign up right now. Okay, 1, there's 2. Okay, you got 10 left. There's 3, 4, 5. You got 5 left. Okay, you go back there and sign up, and that's $26.95. As soon as you're at 12, 15. Okay, there's too many. All right, good. All right, guys, I'll give you a schedule back there. Would be now. Let's move on. I'm going to show you. You guys sit back. I'm going to show you now the next strategy. We've got these Wall Street workshops here. We've got them around the country. You need to come, and you will have a lot of fun being there. So, paperwork. You still need to listen to this next part. Okay, all the rest of you still here. I obviously haven't convinced you, and this special is going to people. I get 11 minutes to try to win you over. Try to explain to you the next strategy, all right? The next strategy, everyone, really is 2 strategies that we're going to put together. It is investing in companies that are doing stock splits coupled with doing options. So I need to do a very quick vocabulary lesson and show you these 2 strategies. Let's talk about stock splits first of all. Let me give you an example. Coca-Cola just did a stock split. Little hint. All right. McDonald's hamburgers. Ticker symbols MCD. About a month ago, McDonald's $54, and it made an announcement that it was going to do a 2-for-1. The stock up to 50. It went up 61, backed off to $58. Went 58 on the day of the split. It split 2-for-1 down to 2 shares at $29. Just within a few months after that, within a few months after it got down to $29. By the way, do y'all see this? I mean, if you had 100 shares of McDonald's at $58, the next day after the split, how many shares do you now have? There's $9. Theory, but what's going to happen? Just because it did the split? No. 2 splits when they're very well run, good earnings, the stock has increased. I think McDonald's is doing the split. Why? So more people can afford the stock? I'll buy into that one a little bit. Guy, chairman of a board of a public. Let me tell you why companies do stock splits. Because the founders and the owners of the company, like 17% of the Kroc family, still owns McDonald's. See everybody else doing these splits and the stock's going right back up. They're greedy and they want to see their stock go up. And it goes to 58, down to 2 shares at 29, and it climbs right back up. It's no kidding. Within just like 5 months, this stock was back up to $55. Now, and I think at the time of this taping, it's right around $53. Okay. As I can show you company after company. I told you about Microsoft before. What I'm saying here tonight, that it usually takes a company like 3 or 4 years for it to recover its price. By the way, what if you recover your price? You got $100 to 3 at a nice rate of return to double your money every 3 years, yes or no? Not very fast, but it's not bad. What would happen though if you could find a stock that goes to 100, splits down to 2 shares at 50, and 3 months later it's back up to 100 again. And then it splits down to 3 shares at 33, and 9 months later it's back up to 100 again. How? I'm going to show you some charts. I'm going to show you some charts so you can see, pre-written on some of these, but you can get a feel. This one is Ascend Communications. This stock got up around $80, climbed right back up 3.5 years, not a month like some of the other ones. 3 months later, it's back up to $80. There's another split down to shares at $33, climbs right back up, and then it says, look, let me show you some more. Here's Travelers Insurance. You've all heard of Travelers, right? You see the umbrella on TV. Travelers, by the way, owns Smith Barney. It gets up 68, climbs right back up, does their split, and climbs right back up again. Tell me what gets better. You're not guaranteed of making money on a stock split. And doing a stock split for the sheer sake of doing a stock split is a little bit risky. But let me then now add a little bit more ammunition to this. About 90% of the time that a company does a split, they also announce an increase in their dividends. Usually they also announce an increase in their earnings. They've got money, therefore they're going to pay more out in dividends. If a company pays more out in dividends, what does that have a tendency to do with the stock? It goes up too. What if the company stock buyback, which they do from time to time? They've got all their money, and the company says, wow, we're making all this money. Our stock is worth more than buying it back ourselves. They announce new products. What's happened at the same time? Because the board of directors is meeting. Don't make it that simple. They have their annual meeting, or together, the profits are. No, let's give it a discussion. Stocks are at 140. Let's go ahead and split it 3 for 1. Now instead of $140 stock, now you have 3 shares at 33. You see what happens? And there's a tendency when it goes down for the stock to come right back. I can show you company after company. About a year ago right now, Monsanto did remember Monsanto, the big company that helps you squirt all your weeds in your garden? 5 for 1 split. 150. Now tell me, if you had 100 shares of Monsanto at 100, and 3 weeks later you had 500 shares at $30, what would you rather have? 500 shares at $30 because it's already back up to 44 a year later. Now what's this? Could that have been hard to go and those range not for this? But how about it going from 30 to 40? Piece of cake. You see the point? I love companies doing stock splits. Let me show you. It hasn't performed with irrational exuberance, but look at this. The stock gets up around 102, and it's already back up to. This has only been 9 months since one split. Look at this one. This is Avon. You know Avon products. You know the door thing. This one gets up around 94, splits down to 2 shares at 47, and it's already back up to $60 9 months later, 10 months later. Okay. This is an interesting one. This is Dell Computer. Now, at the time of this tape recording, at the time of this seminar here, Gateway 2000, just a few weeks before. Now, this is the company that sells the computers through the magazines and all that sort of thing. And as soon as it did the stock split, Gateway 2003, it's currently around 75, 2 for 1 stock split. I played it big time. I was jumping all over Dell Computer. Gateway 2000. I was jumping all over this thing. Then I started looking around. When everybody's paying attention, one of the things I learned is you look at different signs. Hey, one bank, like if a Nations Bank starts to, then Mellon Bank, they all follow suit. Right before this seminar that we did, we're really watching Mobil. Last year went up a double tendency to do stock splits. We were waiting for Mobil to do a stock split. Snuck right on. Royal Dutch Petroleum, $180 stock, just a few weeks ago, announced it's $180, 4 for 1 stock split. Then Mobil announces a 2 for 1 stock split. Richfield announces a 2 for 1 stock split. And Texaco, by the way, they had their shareholders vote on 750 million more shares of authorized stock. Because if you do a stock split, you have to have enough stock to split into. At that point, so we're waiting for Texaco now to do a stock split. Whether it will or not, I don't know, but it looks like it's going to do so. It's what we call sector investing. It's like a hot potato. One company about this seminar, and by the way, Dell This is Dell. Summer did a stock split. Actually last fall did a stock split 58, climbed right up to 114. Actually, it was up to about 95. Announced a stock split. It's up to over $110. It announced 2 for 1 split. Now, how do you like a company doing stock splits every 13, 14, 15 months? What do you think? Then have the stock go right back up? I'll tell you what, you're going to have to get up awful early in the morning and eat a double dose of Wheaties to learn how to lose money stock splits. I challenge you to find a way to lose money at this. You can if you don't play it right, but it is tough. Matter of fact, I'll make you another challenge. You find me one company in America, and don't go think you can use Compaq on me, because I'll show you how Compaq went right back up too. You find me at one company in America 3-4 years of the original price. If you can find one. For every one you find, I'll show you 50 that have gone right back up. If you can find one. So what am I saying? I'm challenging, fax it to me, send it to me. Then I'll fax back to you 50 that have gone right back up. So it doesn't get too tough to make money here. Now, with that stock split news in hand, I want to now shift gears and talk about another form of investment. This next form of investment involves stock options. An option stock, just like an option to buy real estate. Now, we're going to be coming up on a break here pretty soon, and then when we come back, I'm going to show you how to write covered calls, which will be our third strategy. Then how to sell some puts, which is my favorite strategy, is selling puts. It's one of the coolest strategies out there. But I want to now show you one more strategy and then marry it together with the strategy on stock splits. I hate losing money. Stock, but there's another way to do it, which is to get an option to buy the stock. All right, so let's explore that one. Let me use a real estate example very quickly. That you find a property for $140,000, $180,000. The guy wants to sell it, and he's willing to sell it for paper. He's willing to take $50,000 cash and cash out the $50,000. How about if I give you 3, 4? How about if I give you $5,000 cash now and get the right to buy it from you for the $140,000 within the next 6 months? Y'all heard of such a thing? It's an option to buy the real estate. So you pay this guy $5,000, and you have the right to buy this property for $140,000 6 months, 9 months in the future. Now, there are 2 ways of making money on this transaction. One way is to put down your money, your $5,000, tie up the property, fix it up, get it ready, get it sold, and sell the house and make the money. That's one way. Sell it for $170,000, $180,000, you make a profit. But time goes on. You got 6 months to do this. This option is what is called a fixed time investment. What happens if the 6 months run out and you don't do it to your $5,000? You forfeit your $5,000? Because your $5,000 tied up this property, did it not? You had the right to buy it at the $140,000 price. If it messes when you don't get it, you lose your $5,000. The guy took it off the market for you for that period of time. It is what is called a fixed time investment. Let's say 3 months goes by, 4 months, 5 months. You've got 1 month left. Can't do it. You can't get the loans. You can't get the money to fix it up. Hey, you got 1 month left, though. So you get a hold, let's even say you have 3 months left. You call a builder friend of yours at your church, and he builds and fixes houses. Hey, I got the right to buy this house for $140. It's worth $180. How about if you take it over for me? Could you sell him your piece of paper, your right to buy this property? What's it worth? If you still got 3 months left and there's $30,000, $40,000 potential profit there, could that $5,000 right, that $5,000 piece of paper be worth something? So maybe he'll give you $7,500. Maybe he'll give you $10,000 for your $5,000 piece of paper. Cool deal. See, the other way to make money on this is not just on the house, but is on the option, the piece of paper itself. But now let's go up to that 5th month. Matter of fact, let's go 5.5 months. You got 2 weeks left. And you say, hey, got time left. Can that $5,000 piece, see, when you take a house for that first 1 minute, you just call stock option. Now there are options, the put in obligation option, the on or before date. An option is the right, not the obligation, to buy a stock at a particular price on or before a certain date. Once again, everyone, an option is a fixed time investment. It expires. So let's talk about the expiration date. Options always expire on the 3rd Friday of whatever month you're buying it for. So you can buy an October option or a January option or a June option. Technically, it expires at 11:59 a.m. on the Saturday after the 3rd Friday of the month. But the stock market is closed. Here in the West Coast, it's closed at 1 p.m. The option market closes about 1:10 p.m. on Friday. On the East Coast, it's 4 and 4:10 p.m. when the stock market and the options market closes. So because it's closed, you can't trade after that. So effectively, even though it doesn't close till the next morning, it's effectively closed. So when I say the third Friday, functionally that's when it is. The third Friday, you buy an option to buy stock. What is this all about? Now I'm going to say a sentence to you now. I'm actually going to say two sentences that kind of put this all in perspective. Matter of fact, I bet a lot of you listened to my tapes, read my books before you came here. I'll start the sentence. I'm going to let you guys finish it. Okay, ready? When there's a small movement in the stock, there is a... Very good. I love it. You're like a choir. Almost. Let me say it again. When there's a small movement in the stock, there is a corresponding magnified movement in the option. All right, now before I explain that, I'll use an example here in just a minute. Let's talk about options and what they are. There are two types of stock options. There are call options and there are put options. A call equals the right to buy a stock. A put equals the right to sell a stock. When you buy a call option, you are hoping that the stock goes up in value. When you buy a put option, you are hoping that the stock goes down in value. Now, just like stocks, options have a bid and an ask. They have a price that you buy them for and a price that you sell them for. You may call your stockbroker on a particular strike price, and he'll say, well, the option is 2 5/8 by 2 3/4, which means that if you buy it, you're going to buy it at 2 3/4, and then if you were to sell that same option, you would sell it at 2 5/8. This is the bid, and this is the ask for options, just like stocks. Next point. Options are always in 100 share increments. So even though we refer to 2 5/8, or let's use a different example. Let's say that you call your stockbroker and you say, how much is the option on this stock? And your broker tells you it is 75 cents. Now in your brain, you immediately have to calculate 100 shares because they're always in 100 share contracts. So 75 cents translates into what? $75. So you buy one contract for $75 plus $25 to $50 in commissions. All amounts of money to get started, the commissions eat up most of your profits. That's why you need at least $1,200, $1,500 to get going. If you only have $500 to get started, you can do some of these strategies, but it's so tough because the commissions eat up so much of the profits. So 75 cents equals $75. How much would it cost to buy 10 contracts on this stock? $750. How many shares would you control? If you have 10 contracts times 100, how many shares do you control? 1,000. So you have now, for $750, had stock. You've locked in the price at whatever price you've agreed to. What are those prices? Options always start, the cheapest option you can buy on a stock is $5 in very quickly. $5.50, $10, $50, $15, $17.50, $20, and $22.50. Once they hit $25, then they go in $5 increments. 25, 30, 35, 40, 40, and on up to 200. Once they hit 200, 220. So in the $18 stocks, around 18, there'd be a $17.50 strike price and a $20 strike price. All right, now let's show you how this works. With an example to show you that when there's a small movement in the stock, there's a magnified movement either up or down in the option. And remember, these are very, very risky. You should only invest in options when you understand them and really get it, and when you're doing it with play money, when you're doing it with money that you can lose. You should not be doing this with your retirement money. You should not be doing this with the money you need to feed your families. If you've got $100,000 to invest, maybe $2,000, maybe $3,000, maybe $4,000 would be put into options. These are very aggressive. You make lots of money, but they're also very, should not be with risk money. And only then. If you have $10,000 to get started, I'd put $9,000 in some good, safe, solid investments and maybe spend $500 or $1,000 on options. Y'all see the point? Very little money into options because they're just too risky. All right. Let me give you an example. Ford is an awesome company. Right, it's been going between 26 and 32. Right now, Ford for the last year has been going from like $30, $31 up to about 36. Back down to 30 or 31, up to 36, all right? So look at Ford is rolling, just like a rolling stock. And by the way, you could just get rich, just put blinders on and stick with Ford. Get to be an expert at Ford and make all kinds of money. Symbol is F on Ford. Let's say the stock gets down around 30, 31. You think it's going to go back up to 36. You call your stockbroker and you say, how much is the $35 call option going for? And at this point in time, it's so far away from 35 that there's not a lot of belief that it's going to get back up there, like within the next month or two. And your stockbroker tells you that it's 75 cents. Okay, you say, buy me 10 contracts. Okay, once again, money, 75 cents and 10 contracts. How much money? $750. So you spend $750. And you've tied up now how many shares of Ford? And you have I want to say another sentence to you that is so important. Listen carefully. I do not buy options to actually buy the stock. I does not have to get to $35 for you to make money. It does not. Ford just needs to climb a little bit. Matter of fact, I'll give you an example here. Let's this way. Let's put the stock here, and let's put the option here. And let's look at, I'm just making up these numbers, but they're relatively close to what it would be in real life. The stock's at 31, the option is at 75 cents. The stock goes to, say, 33, the option goes to $1.50. The option goes to 35, the stock goes to 35, the option goes to, say, 2 1/4. The stock goes to 36, the option goes to 3, the stock goes to 37, the option goes to 4. See, once it's above 35, if it's a $35 strike price, every time the stock goes up $1, the option is going to go up nigh on $1 too, right? It goes tick for tick with it. But now let's look at these lower ranges here. The stock's at 31, and the option is at 75 cents. Look at this. The stock 31 to 33. That's a $2 move. I mean, think about that. What percentage of a move is $2 on a $30 stock? 6%, 7%? So the stock moves 6 or 7% up, but look at the option. The right at 35 has doubled. It's gone from 75 cents to $1.50. Let's do it again. The stock goes up another $2 maybe in the next week, and the option goes from $1.50 to $2.25. That's another 75 cents. That's a triple move right there. Let's sell it. Remember, we're not buying the option to buy the stock. We bought the option. It's gone up in value with the stock going up. Oh, by the way, could this option have gone down? If that stock went from 31 down to 30 down to 29, your 75 cents went down to 50 cents into $1/4. It may never have recovered before fast. So you should not be doing this unless you can just, you're exactly where it's going to go. From a third, you see it coming back up. Then when it bottoms out, that's when you buy the stock. Now, you call your stock, if it's at 225, as long as there's a bid and an ask on stock, you can sell it. Now, that's not the CBOE, the Chicago Board of Options Exchange. It's a question that acts and all to make sure that every order gets filled. You want to sell this thing and you can pick up 2 1/4, sell it. How much money would that be? You've got 10 contracts at $2.25. How much money, everyone? Help me out. $2,250. Well, how much did you spend to buy this option? $750. So you sell it for and you make $1,500. Put there in 4 weeks. Sometimes buy these options at 8 o'clock in the morning. Moves up $5. We stock the option moves up $2 hour a day. Make a couple thousand bucks a day and go fishing the rest of the day. Got one LA. $1,000. More money had you bought the stock and sold it for $35. Right? But how much would it cost you to buy 1,000 shares of a $31 stock? $31,000. Even if you did it on margin where you only have to put up half the money, it'd still be $15,500. But if you spent $31,000 and sold it for $35,000, you'd have $4,000 profit. That's a heck of a lot more than $1,500 profit. But what's the point? You tied up $31,000 instead of $750. I'll say it again. When there's a small movement in the stock, there is a corresponding magnified movement in the option. That's what we capitalize on. Now we can do these as rolling stocks slam down, or when they peak out we can buy puts and write them down. But options give you a chance for a fraction, a lot of risk, but for a fraction of the dollar amount to tie up the stock for the move by selling. Now what do? You've got $1,500 profit. You got your $750 back. What do you do with that $1,500? You take that, stick it over into some nice, safe, solid investments, and you go back to work with your $750 again. And eventually, you've got this great portfolio of stocks that you're able to purchase with the profits you made from other stock market investments. So you can quit working so hard to buy investments, you get your money buying investments for you. Now, I'm going to show you how this works with an option on a stock split. I'll give you Coca-Cola example. Coca-Cola, the ticker symbol is KO. The stock was $70 last. They made a 2-for-1 stock split announcement. Well, it climbed almost up to $90, about $89. It backed off to about $81, $82 shares at $1. In this last year, has gotten back up these stock times 3 on there, 50, 54. Look at this. Now you have 2 shares of this stock at $41. Let's take time out now. Instead of buying the stock at 82, let's call up our stockbrokers like right about the time they make the stock split announcement. And you say, this is the middle of May. How much is Coca-Cola, the $80 call options going for in July? So you buy the $80 July call options, and he tells you that they're going for $6. Well, my goodness, at this time, the stock was at $81, $82. So you're paying $4 just for the resting 80. Now, $2 of your $6 is what is called in the money. Right? You got the $80 call, and the stock's already at 82. $6 is paying for the. Sounds like a lot of money. But for the next 2.5 months, you've tied up the right to buy Coca-Cola at $80. Anybody else right? Because what just might happen? It would be $6,000. Okay, here it is. When the stock splits, the options split. You had purchased 10 contracts for the right to buy it at 80. Now you have 20 contracts for the right to buy it at 40. Y'all catch that? See, you had purchased 10 contracts for the right to buy this stock at 80. When you now have contracts, still cost thousands, not to anybody else here. Because the tendency now, if it has earned, now listen carefully in. When the stock splits, option split, they do $6 for the 10 contracts, $6,000. It still costs $6,000 for the 20 contracts. So now your cost on each one of these options to buy it at 40 is not $6, it is $3. So your cost basis on the option is 3. Now let's see what happens. Here it is, the middle of May. The stock's at 41. The stock goes to 42. Stock goes to 45. My goodness. Stock's at 45, which it is. It went right up to 45 and 46. If that stock's at $45 now, just a couple weeks, almost to the 1st of June, and you still have the right to buy it for 40 July, and it's already at 46, what does that right, that option, have to be released? If the stock's at 40, it's got to be worth at least 6 plus any time. When it hit 46, the option was going for about $8.50. Now, when it hit 44 and 45, and by the way, you don't have to, actually, I had these 20 contracts. I got to tell you, I had about 300 of these contracts. When Ford announced the split land into this, but my 150,000 turned into about 380,000 in 3 weeks. It was unbelievable. Well, not unbelievable. I do it all the time now, you know. But most people don't see it. It kind of looks like magical, you know. I mean, I always take that times 2 weeks, and I divide 2 weeks by 52 weeks, and I get these annualized returns. I'm going to quit doing that because we get the 10,000. I'm not going to do this, that same batch of money every 2 weeks, right? Now, if you quit about getting 6% in your bank, here's how you get annualized return. I mean, my staff is taking it so serious. I was playing basketball at 30% today. But you know, annualized, that's not a bad return. Okay. All right. Now, think of this. This stock, by the way, at $4 for like $6, and the back right one now, I'm sold about 2 of them at like $7.75. Okay, I mean, I was doing so many of these in different accounts. Now, does anybody like this now? Think about buying an option which gives you that little bit of investment. You know, again, they're very risky, but that little bit of investment on a company that is going through a stock split. Now, this is what we call in your evaluation. Escalate means to blend or to weave together strategy. It's also doing roll. So up to 38, 30 up to you think. Now, what do? Fund and buy the stock. You give some serious consideration. I still haven't told you about right to the break. But I want to show you one other thing, really think that you should do. A couple years ago, I started teaching a lot of these stock market seminars. Now, for many years, I was doing the real estate seminars, and once in a while, I would say to the audience, would you like me to show you what I'm doing in the stock market? This is rolling and a few other things I was doing. And they were to develop a whole new seminar besides real estate. So we took some of the basic strategies, and we created the Wall Street Workshop that you see today. We are now doing between 6 and 8 Wall Street workshops a week, and they're virtually sold out in almost every city we go to. 80 people, 100 people. We've got about 12 instructors, and about 6 or 7 or 8 of them are out every week somewhere in this country doing a Wall Street workshop. I mean, it's turned into just a phenomenal part of our business. We also had a request. A lot of people said, Wade, I really want to see what you're doing. By the way, would any of you like to watch me and what I and my instructors are doing every day? Would you like to see what we're doing? How about within 5 or 6, maybe 8 minutes after I do every trade, because it takes a while to type it up and get it on a computer bulletin board, how about if I put all of my trades, how many contracts I bought, what I bought them for, why I bought them, where I'm going to sell them? How would you like to see everything that I'm doing? Now, I'm not going to tell you how much I'm worth anymore because I don't even know. I figure if you know how much you're really good to know, they're willing to let you watch older. Look at this beautiful building here. It costs millions of dollars. Maybe you could figure it out, how to build a building, line up the finance, and do everything. But you may not be able to do that. A little trade of Coca-Cola, and you can log on and find out what I'm doing. Could that be very helpful? Well, at first I thought, let's do a newsletter. But that's a waste. By the time I write a newsletter, type it up, typeset it, print it, and mail it to you, what's the problem? That stock is rolled up and down already one time. It's old, stale information. So a lot of people suggested, why don't you get a computer bulletin board? I got to tell you, it's to get a BBS. I thought a BBS was a British intelligence thing. I'm not into computers, even to this day. I now know how to log on. I can do that now. I can turn the computer on. My wife will let me turn it on. That's all she'll let me do on the computer. And she says right there, and I'll push this button. She'll let me do that. I am not computer literate. I'm making too much money to get into computers. Let's have a bulletin board. Now we're on the internet. You can just get in through the internet. We even have access to the software for you if you want to get that. And it's called WIN. It stands for Wealth Information Network. You can log on as many times as you want, 24 hours a day, 7 days a week, and see what I'm doing. Even today, before I did this tape, I was doing some stuff on Dell and Boeing and Nike, dropped about $9, and I was doing puts and buying the stock. And everything that I did on I bought some stock in Charles Schwab today. I did a bunch of things, like 14 trades today that are on the computer. Now, any one of you can go home tonight, log on, find out what I did today. And tomorrow when the stock market opens again with it, I usually play basketball in the morning, so here's the way it works. On the way to basketball, I play basketball right at 6:30. That's when the stock market opens. I realized I could make an extra $10,000, $20,000 a day in the stock market if I didn't play basketball, but there's just priorities in life, and you got to play basketball. I mean, I'd rather play basketball than eat, so that's just where I am. So I about 6:25 or 6, I'm talking to the stock. Okay, when the market opens, let's do this and this and this and this and this. And 7:30 when I get done, I go back out there and he tells me what we did. Then I call it in. I say, okay, I bought this option. We sold this one. We did this. And I put it on there. And I play basketball 3 days a week. The other 2 days, I'm up usually around 6:30 or 7, and I do whatever I do, and I put it on the bulletin board. Then you can log on. I'm not telling you to copy me, and I never, ever give advice. But how would you like to watch what I do? And I think that you need, this is called WIN, Wealth Information Network, and I think you need it for a couple of years. If you haven't figured it out within a couple of years and gotten rich, probably no hope for you. Might as well get off anyway, right? So, it for a couple of years. Now, WIN is not very expensive at all. By the way, what would you pay to watch a millionaire making tens of thousands, even hundreds of thousands of dollars a month? We had one little play we did with a little company called Eurogas. We put about $300,000 in about 6-7 months ago and just sold everything this week for $825,000 and $875,000. And we showed everybody exactly what we did, why we did it. Berkshire Hathaway bought a whole bunch of that stock at $33,000, now up over $42,000 a share on Berkshire Hathaway. And Berkshire, all there. You can watch what I'm doing. What would you pay to watch somebody make tens of thousands of dollars a day? What is it worth? By the way, have you ever seen anybody do this before? Because there are a lot of other books out there on the stock market. The bookstores are loaded with them. But you know what I think? I think they all cop out. They'll tell you how to analyze and analyze and analyze, but nobody will ever show you how to do it. They'll tell you how to figure this out and how to figure this out, but nobody will ever let you watch them do it. And nobody will ever put their bad trades. See, we put every trade on WIN. It's embarrassing sometimes. Because I screw up. And by the way, whenever I screw up, it is one of my formulas. I figured all this stuff out. I stuck it all together, how to repetitiously and predictably make money. And almost every time I lose money, I go back and say, wait, see, I even think I'm smarter than my own formulas. And my students all over the country say every time, so we have video sets and audio sets and that you can study, every time they lose money, they go back and they say, I just didn't follow the formula right there. Say, I should have put the order in the cell right there, and I violated the formula, and that's why I lost money. Figured this stuff out of this financial process, a student making money. And I continue to be that. If there's anything in my life I want to be more than an educator, is to be a then sharing the things that I've learned. This bulletin board is called WIN. It's $3,695 a year. What is $300? $10 a day to watch me making tens of thousands of dollars. It is absolutely peanuts compared to what you get. Now, let me tell you what we have also over here. What you see here in these home study courses, either on either side of me here, is a home study course called Zero to... I'm going to put a package together of the Zero to Zillions home study course, and let me tell you what it is first of all. This, I went to a student, what I did here today, it shows a lot of the strategies. And that's a bonus tape called Zero to Zillions video. Here's a video right here. There's enhanced returns, minimized taxes, a whole seminar writing covered calls, how to get exponential returns, and the millionaire mindset, which is a lot of the basic strategies. There are workbooks that go with each one of these. Right now with the Zero to Zillions, we're including, well, you could either get either one, but right now we're including the Wall Street Money Machine book with that. Now, Zero to Zillions, we've sold it at different prices, but we have a Zero to Zillions WIN combination. Now, this basically goes for $9.95 all by itself, and we sell WIN for $36.95 for the year. But what we have here is a package, a combination package that will get you going. It's like a startup package. It is $1,290 discount. We usually sell it for $14.95, but here tonight we're going to do it for $12.95. And here's what it includes. It includes the 0 to Zillions package, and it includes 3 months of win. 3 months of win. If you divide that out, this is a good deal. $1,295 for both of those. Now, for those of you that went back there during that last break, I want to make you a special offer. I congratulate you for that. If any of you still want to do this whole package deal, we will put it together as one package. What I want you to do is to go back to this. Remember the best seminar. That is what we're basically charging for, because that hopefully is tax deductible for you. That comes down to, basically this whole package came down to $36.95 before I dropped off that last $1,000. Go back up to this price. This includes a Wall Street workshop. Oh, and by the way, the spouse rate is $6.95, but right now we have $2,000 off of the spouse rate, or $16.95 for a companion rate, if you will, a business partner or a spouse for $16.95. So you don't have to pay 2 times this amount to come to the Wall Street workshop. A second person can come for $16.95. But I want you to go back up to this price here. I'm going to make a different offer now. All of you that went back there at the last break, again, I thank you. If you'll just go back to the $26.95 and add on $1,000, this price right here, the $36.95, I will include the whole 0 to Zillions set. Remember, the 0 to Zillions includes, that package includes 3 months of win. I'll tell you what. If you go back and do it right now, I'll include another 3 months of win. So you get 6 months total of win. That's our computer bulletin board service, plus the 0 to Zillions home study course, plus, and we're also including 1 youth Wall Street workshop with this for your kids or your grandkids, everything there for $36.95. So for the one price, you get everything that you see on the screen. The best seminar, the Wall Street workshop, 0 to Zillions, 3 months of win, an additional 3 months of win, the whole package for that additional $1,000 for most of you that already bought the $36.95 for anybody else. If you want to take advantage of this, please do so now. Now let's go ahead and take a quick break, and we'll come back and I'll show you one more strategy, which is probably the best call. So hurry on. Well, thank you and welcome back. Now this next section is going to deal with writing covered calls. But before I get into this, as we took this last break, people ran up to me on my staff and said, Wade, he's telling the story about the stockbroker that called you about the investment for sale that picked himself up off the floor. So let me just finish telling that story because it's kind of interesting the way I handled that. I said, look, I want to see your tax returns for the last 3 years. And he asked why, and I explained the thing about the $100,000 a year and to whom you're listing. Then I said, and I also want to see all of your own personal purchase orders for that stock that you're trying to sell me. Well, what do you need to see that for? Well, you wouldn't want me to buy a stock that you're not buying, would you? You're not expecting me to do that, are you? I tell you what, I'll do. I can tell by his reaction. I will buy as many shares as you have. But fax me right now your personal purchase orders on how many of these shares of this stock you bought. By the way, guess what happens? Click, they hang up on me. Here's a guy trying to sell me something that he hasn't even bought himself. I am so big into this, to whom you're listening. Where are you going for your advice? Can I tell you another quick little sidelight? The largest elevator manufacturing company in America has their plants spread out almost over 3 acres of ground, and there's not a second floor in the building. I mean, an elevator manufacturer that will not ride the elevator. I mean, does that tell you something? So I'm really into this, to whom you're listening. Anytime somebody comes up to me and says, hey, Mr. Cook, Wade, can I give you some advice? I say, whoa, I don't know. Let's talk about that. How much money are you making with your advice? You see the point? I mean, I make really good money. You make more than I, then I'll follow your advice. If you're not, now I have other people give me hints and tips along the way, but man, I tell you, there is so much bad advice in this world. I sit there and listen to it. I read some of these financial magazines. I'm saying they just give me a knot in my stomach that people are reading these magazines and following the information. In the real world, you can almost tell what works and what doesn't work. Now, I'm going to show you a strategy right now that will consistently work. It may become the powerhouse behind your financial strategies. Oh, by the way, one other thing happened at the break. Talking about that big guy that started with a $4,800 that was up to $1,020,000. Everybody reminded me to tell you that he borrowed that $4,800, and he's now over $1.5 million. Amazing things, amazing things, amazing things happening to people who don't look amazing, but who do amazing things. That's one of the good things about the stock market. You don't have to look a certain way. You don't have to dress a certain way. We have a young mother in Boca Raton, Florida. She really wants to stay home with her 2 kids. Her husband left her, 2-year-old daughter, 3.5-year-old daughter, almost a 4-year-old daughter, and she does not want to have to put them in daycare and go get a job. Is that a fair statement for a young mother to make? I want to be home. Her dad says, I can't support you very long. I heard about this Cook guy. Why don't you go to a seminar? He paid for her to go to my seminar, gave her $5,000. She quickly took it up to $8,000. Now with her $8,000, she makes about $5,000 to $8,000 a month, working about an hour a day in her room across the hallway from her bedroom. So her whole work thing is to get her pajamas on, or keep her pajamas on, and walk across the hallway and go to work. That's her commute. She works for a while, gets the kids up, feeds them, does her thing, plays with the kids all day long, watches TV, does whatever she wants, goes out for walks, usually about a half hour before the stock market closes, right, to finish up any deals, get some closing prices. Hey, well, it sound like a pretty good day? If you learn how to make $5,000 to $8,000 a month, can most people live on that? She sure could. She only needs to live like around $3,000 a month to totally pay all of her bills and live very comfortably. And she's making $5,000 to $8,000 a month, every month. This has been going on for over a year now. See, I love getting testimonials. The ones that I like the best are not the flash in the pan ones, the guys that make a whole bunch of money and run it up. Those are nice. The ones I like are common, everyday people, like Kent and Dana. Now, I've adopted 4 kids, and I know how wonderful it is to adopt kids. They had adopted 2 because they couldn't have babies together, and they had a chance of adopting 3 more kids. They needed $10,000 times 3 to adopt 3 more kids. They came to the Wall Street Workshop, not knowing how they were going to be able to do this, but they had the opportunity. They needed $30,000, $10,000 per kid to adopt them to pay for the medical expenses. Within 30 days, about 32 days after the Wall Street Workshop, they had made their $30,000 almost to the penny. They were able to adopt these 3 kids. Now, those are the stories that are meaningful to me. Stories of people telling me that their whole church was in debt to build a new church and all that, and they went into debt to build a church, and they're waiting for donations to come in. They come to the Wall Street Workshop, and within months after that, they're able to pay $100,000 to their church and pay off all the debts. Those are stories that are meaningful. It's not just making money. It is making money based on principles. Now, I'm not going to turn this into Sunday school class, as I told you before, but I want to share with you just a couple of ideas. And I really believe, and I hope that you do too, that there are people who have lived before us that have had relationships with God, that have learned how to handle their financial affairs. Well, I want to just share just a couple of ideas with you on that. It was always not this way in my life. For many, many years, I wanted to choose and pick my path. To put my feet where I wanted to put them. And I realized a long time ago that that was not where I was going to find happiness. But I couldn't break away from what I had been trained. Now, don't get me wrong. Even as a kid, I memorized scriptures like, seek ye first the kingdom of God, and all these things will be added to you. I memorized that stuff. Where your heart is, there, and where your treasure is, there will your heart be also. I know that stuff. I know it up here, but I didn't know it in here. Now, there are 2 things that all of us need if we're going to be successful. I'm going to list these 2 things because they're very important. One is we need a set of values or a set of principles that we are going to live our lives by. I'm going to share one with you right now, and I'll tell you about a principle that was important to me. When I first got started in the seminar business, and after doing the real estate deals, making money was very, very important to me. Too important. I was consumed by it. I made really good money. I built up my net worth to a couple $1 million. Now, to go from a Toyota to a Mercedes in a beautiful $500,000 home in about 2 years was an amazing thing to me. And I had everything. My bills were paid. I was making all this money, put money in my accounts. I had it all. But something happened. Something happened in my life. First of all, a whole bunch of things went wrong in business, and I lost everything. Now, I don't know if you can experience with me tonight what it's like to have a beautiful, beautiful home, and a month later to be living in a little dumpy rental house that you can hardly stand to go into. To hide your car behind a building next door to your office so they won't repossess it, and they found it anyway and took it away from you. And then have them send me a letter who was worth a couple $1 million several months before to come and get my things out of the glove box. And that happened to me. And I looked around and I said, I'm doing something wrong. I have learned how to make money, but I have not based it on any solid principles of wealth, of righteousness, or anything else you want to call it. See, I had, through my teenage years, I had read every book on success I could get my hands on. Norman Vincent Peale, Dale Carnegie, the Power of Positive Thinking, and Og Mandino, the greatest salesman in the world. Anybody read those books before? I read them, I studied them, I underlined them. I read those books more than I even read the Bible, I'm embarrassed to say now. I had those principles locked in my brain. I knew them. I knew them inside out. My problem was, even though I knew those types of success principles, what I did not have was a method or a business or a horse to ride. And that's what I needed, and I did not have. When I stumbled across real estate, I said, wow, here is a business endeavor. Here is an investment that is worthy of the effort. And I can take and apply all these success principles that I know and apply it to real estate. And I did. I did it aggressively. And I went out with real estate and I bought and sold, and I made so much money. And then when I got off that horse, I found the career horse that I really wanted, which was to teach. And I started writing books and getting books into bookstores and doing radio and TV talks. I did like 1,600 radio and TV talk shows in about 5 years. And my books were on the bestseller list, and I was just going nuts with this, and I loved it. But something was wrong. See, I had my principles all backwards. My business consumed me. If I had time left over, then I would spend some time with my family. And I went to church about 1 or 2 or 3 Sundays a month, if that. I had it all wrong. When I lost everything, it caused me to really think about my life, to realize that the priority should be this way. God is number 1. Family is number 2. Business is number 3. And if you want to have hobbies like fishing and stuff, that's 4, 5, and 6 way down there. But it was all backwards. See, to me, business was number 1, family was number 2, and God was number 3. And I had them all wrong. I had them all backwards. One by one, I started applying principles right out of the Bible. Right out of the Bible. And you know what? Since I wrote this book, Business by the Bible, and started teaching this in some of my seminars, I've been criticized by the powers that be. And I realized that as I try to teach godly principles and applying business principles with godly principles, that I'm going to be criticized by government officials and Wall Street moguls, and all those people are going to criticize me. But I'm going to wear that criticism as a badge of honor. Because the harder I try, and if I can tonight inch you one step back to going to church again, one step back. The whole business here, this business by the Bible, the reason I use the word buy, B-U-Y, was to simply get you to buy the Bible. Some of you don't even own one. You need to go buy one. And then you need to buy into the principles in the Bible. There's wonderful stuff in there. You can start with Leviticus chapter 19. It's called the chapter of holiness. It's an awesome chapter. Then go read Psalms 119. Just start there. Then go read Matthew chapter 5, and that'll get you going. That'll get you going, and then you can go off different scriptures and things like that. And you will realize how pertinent those scriptures are to our lives. You'll see things on how to hire and fire people. You'll see things on how to treat people. You'll see things on tithing and how to give to church and how to serve other people. It's all there. Now, a lot of you need more money to do some of that. You can be faithful without money. But I'll tell you what, one thing I've realized, from watching and studying the scriptures and watching other people, I realized that God wants to prosper us. I can't find anywhere where he tells us to obey the commandments and do his will that he's going to say, then I'm going to bless you with poverty. You know what? I can't even find one scripture in the Bible that talks about lack or scarcity. And the ones that I do, it says, I'll give you everything, but if you don't obey me, then you'll find yourself lacking in a negative sense. Everything is, God delights in the prosperity of his servants. He established a covenant with Abraham, which extends down to us. And if you'll live the covenant and walk uprightly, then those principles become alive in your life, and he will prosper us. Now, prosperity, wealth, is all relative. Take the Temple of Solomon. Probably the richest man in the Old Testament was King Solomon. Take his temple today, stick right next to it a little backwards house out of West Virginia, a hillbilly house, with electricity, barely has running water, air conditioning unit in the window, and an old oil furnace. And tell me, with that little abject poverty house that we would judge people to say they're just absolutely poor, put that little house next to Solomon's temple, and tell me where he would like to spend his Sunday afternoon on a hot, hot Sunday afternoon. He would much rather, I think, be in that house living to some songs of King David on his CD boombox than he would rather be in the king's temple. Tell me where he would want to be on a cold winter's night when it's so dark and damp in that castle, but he has a furnace in this little dinky bed in this little dinky house. Now, wealth and riches obviously are relative. What we have today, the absolute poorest person in America would be considered rich 2,000 years ago. Now, what we do with our wealth is important. But the point is what principle, what values do you live your life by? I've decided that there are so many in the ancient scriptures, basically in the Bible, that you can live your life by. What you then need is a horse to ride. That horse could be a business. That horse could be, heavens, that could be a multi-level company selling shampoo. That could be real estate. That investment, that vehicle could be the stock market. Let me give you an example. You know the parable of the 10 talents? Let me tell one quick story here. Because, see, there's a lot of stories I could tell. I've got a couple of scriptures here. I just want to show you a couple of things. Look at this here. This is God talking to Isaac. And he talks about Isaac sowing and getting 100-fold increase, 100-fold return. What do you think would happen when people criticize me telling people they can get an 18% return on their money? What do you think would happen if I told people that they could get a 100-fold return? See, 18% of 1,000, right, is $180. But a 100-fold return on 1,000 is $100,000. All right, I'm going to show you this comparison in just a minute. And clear, into the New Testament. Once again, this is Jesus talking in the New Testament. If you give for his sake, right here, leave this, you're going to receive 100-fold. Guys, this is not Wade Cook talking. This is Jesus talking. This was God talking through to Isaac before. 100-fold returns. Job, after he proved faithful, received twice what he had before. Look at this. Again, talking about Abraham and then down to Isaac. This is out of Genesis, the King James Version, and this is out of the Torah, directly from the Hebrew into the English. Every time you see the word great in the Bible, it usually means rich because they list a whole bunch of assets after they use the word great. And the man waxed great and went forward and grew until he became very great. Look at this one. Same scripture, but directly from the Hebrew to the English. And the man grew richer and richer until he was very wealthy. Again, I'll challenge you and find one person who tried to live God's commandments that was poor. Yes, I'll give you Ezekiel for a short period of time, and I'll give you Job for a short period of time, but after Job proved faithful, he received twice what he had before. I want to show you one more, just tell you one more quick story, and then I'm going to show you some things on writing covered calls, a consistent way to make money. Do you remember the parable of the 10 talents? How many of you remember that story? Okay, remember the master gave, like he wanted to test his employees, and he gave to one employee 5 talents, to another he gave 2, and to another he gave 1. Remember that story? And then he went away. When he came back, what did he want? He wanted an accounting. He wanted a reckoning. And to the one he gave the 5, what happened? He said, Master, here's the 5 you gave me, and I have gained for you 5 more. To the one he gave 2, Master, oh, by the way, when he gave the 5 back, he said, Well done, thou good and faithful servant. Enter into the joy of your Lord. What a wonderful thing to say. What a wonderful thing to have happen. The one he gave 2, he said, Master, here's the 2, and I gained for you another 2. Good and faithful servant. What happened to the one he gave 1 to? Do you remember that story? He said, Master, I knew that you were a hard man, so I dug a hole and buried it. Now, this is not Wade Cook talking. This is Jesus talking once again. I'm paraphrasing the story, but this is Jesus talking. What did he say? I got to show you now what he said and what he did. What he said to the person was, he called him a slothful servant. And he said, you should have at least taken the money and given it to the exchangers. And then I could have gotten back the 1 with a little bit of interest, a little bit of usury. And then what did he do? That's what he said. What did he do? He said, take from the one that has the 1 and give it to the one that has the 10. How many wish government agencies would listen to that? See, rich people will create more wealth with it. People that are afraid to do anything with their talents is buried in the earth. Now, that's the story in Matthew. The story in Luke is a little bit different, a little bit more stringent even. I want to show you the story in Luke. In the story in Luke chapter 19, he doesn't give talents, he gives pounds. And he gives 1 of these pounds to 10 different people. So he gives away 10 of these. Now when he comes back, he asks for an accounting only of 3. And one of the ones that he asks says, Master, here's the 1 that you gave me, and I have gained for you 10 more. And to the one he gave another 1, he says, Master, here's the 1 you gave me, and I have for you 5 more. And again, they were complimented and asked and invited to attend. To one he gave 1, he said, listen to this one. He says, Master, I knew that you were an austere man, so I hid it in a napkin. A napkin, for Pete's sake. He hid it in a napkin. He didn't have enough energy to dig a hole. He hid it in a napkin. He called him a wicked servant. And then he said, take from the one that has the 1 here and give it to the one with 10. And his servant said, but hold it, he already has 10. He said, do what I say. Take it and give it to the one. To whom much is given, much is expected. To whom, if you don't do anything, you're not going to be expected to do anything. Now, guys, I want to show you something here. If you take 1 and that 1 becomes 10, that is a tenfold increase. Can I take you back for just a second? A little over a year ago, I wrote Wall Street Money Machine. Virtually the first month it came out, it hit the New York Times business bestseller list, and it's going on over a year right now that it's been on the list. Stock Market Miracles just came out and hit the list the first week. Just bam, right up there. And I hope the same thing happens with Bear Market Baloney, and I hope we sell 1 million copies of this one here called Business by the Bible. The Wall Street Money Machine hit the list. It caused all kinds of controversy. People started criticizing me like you would not believe. Nobody that's read the book has ever criticized me, but people who haven't read the book have criticized, saying, how can this guy make this much money? How can he make these claims? Everywhere I go, I bring copies of my proof of returns. I lose money about 4 out of 50 trades. Is that a pretty good deal? And I don't lose that much on those 4. And by the way, about half the time I lose money, the broker screwed up. I'm serious. I don't lose that much. I hate losing money. I make really good money. But I put on the back of the book right here, I put that if you read this book and apply these principles, you'll learn how to double your money every 2.5 to 4 months. Do you guys know how much problem that little statement has caused? We wanted to run some ads, for example, 60-second spots on one of the largest syndicated radio shows in America. And they said, will you take that off the back of your book and we'll run it? I said, people have this all the time. You need to change my principles so I can run a show, an ad show. Forget it. Now I'm going to say to those sitting tonight, let's look at a rate of return. You have here Wade. Let's do a comparison. Here's Wade on this side, and here's the Bible on this side. Let's see which advice you want to follow. Wade Cook says that you can take, say, $1,000, and you can double your money every 2.5 to 4 months if you apply these principles and be diligent and really learn the system. That means in 2.5 to 4 months, your 1,000 would become 2,000. Another 2.5 to 4 months, it'll become 4,000. And another 2.5 to 4 months, it'll become 8,000. That's a nice rate of return. Not bad for 1 year. Now, there's no time mentioned in the Bible, so I don't know how long it really takes. But in the Bible, it says that you'll receive a 100-fold return. I mean, Isaac did it in one season, like about a half of a year. So you take $1,000 here. What's a 100-fold return on 100,000? I mean, on 1,000. I gave it away. It's 100,000. You take this times 100, and you get $100,000. Now, it's very simple to me. Tonight, you guys have got to make a decision. Am I going to follow the advice of Wade Cook, or am I going to follow the advice of the Bible? And I contend that the Bible is a lot better place to go than my seminar. So go to the Bible first and then come to my seminar. But once you understand that God wants to bless you a heck of a lot more than I want to bless you. He has everything. He's willing to give us everything. Says it repeatedly. He wants to give us everything he has. So what are we waiting for? What are we waiting for? I hope that my staff, my seminars, my instructors, and everything I've tried to build my company to be is a help in your life to help you get to where you really want to be. But why get there? Why learn how to make millions of dollars if it has no meaning and if you lose your soul doing it? Why not employ these principles and have these principles become meaningful? And I contend if you'll do that, then you'll find real happiness, and money will just be a byproduct of this. Seek first the kingdom, and then everything else will be added. Now I'm going to show you one more strategy, and then we'll wrap this up and call it a night. This next strategy is a fun strategy. I'll tell you how I learned about it. Novell Computer was one of my learning stocks. It's down around, I just bought a whole bunch more recently, around $7.5, $8. This stock had gone. This is Novell Computer out of Utah, you know, the networking company. This stock was around $30 a few years ago, actually about 6-7 years ago. Ran up to $60, did a 2-for-1 split down to 30. It went back up to 60 the next August, and it did another 2-for-1 split down to 30, and now you have 4 shares at 30. The next August, it did another 2-for-1 split, and now you have 8 shares at 30. And the next August, it did another 2-for-1 split after it hit 60, and now you'd have 16 shares at 30. Every August, this stock split 2-for-1. Every August or the first week of September. When it was down around 30, I saw it drop down to 24. I bought a bunch of it, went back up to 27, and I sold it. I just didn't see it going anywhere. Then it dropped down around 21, 22. I bought some more, went up to 24, and then it just floundered. It went down around $16, $17, $18, and it would go back up to around, it would get back up around $21, $22. But every time it dropped down in the $16 to $19 range, I would buy 300 shares, 400 shares. Now, this is many, many years ago. I remember this time because my whole account this year was like $140,000 of all the money that I had in my account. And I had 3,800 shares of Novell. Now, $3,800 times $17, $18 is a lot of money, is it not? And that's a big part of the portfolio. And when I saw the stock going nowhere, I finally called my stockbroker and said, look, the next time Novell hits $20 a share, sell everything that I have. Just get rid of all of it. And he goes, Wade, if you really want to sell Novell at 20, why don't you write a covered call on it? Now, by the way, you can look up the biggest, thickest stock market books out there, and you'll find the subject of writing covered calls in maybe one paragraph in the whole book. There's nothing to find on this thing. Now, I have 4 chapters on writing covered calls in here, a couple chapters on writing covered calls in Stock Market Miracles. I said, what is this writing? This is many years ago. What is this writing a covered call? My stockbroker started to tell me on the phone, wow, this is too cool. Went up to his office, sat there. Here was the point. You could write a covered call. Let me explain what these words mean. Anytime in the stock market you use the word write, it means to sell. So writing something means to sell something. Remember a call? A call is a call option. A call option is a right to buy. Well, we're going to write a call means we're going to sell a call. Now before, what we talked about doing on stock splits and all that was to buy a call. Now we're talking about selling the option. Well, when you sell an option and you actually own the stock that you're selling the option on, that is called covered. Your bet is covered. Okay, so you're going to write a covered call, which means that you're writing or selling an option on stock that you already own. Well, this stock was right around 19 and a quarter at that time. And so I said, well, what's it going for? He said, well, next month, this is like September, the October $20 call is going for $1 by $1.25. That's the bid and the ask. Now, I had 3,800 shares. That would represent 38 contracts at $100 each. But you can just do it simpler. You could take 3,800 times $1. I said, hold it. You can sell it to bid. Oh, by the way, on options, when you sell an option, you get cash in your account in 1 day. You know, in stocks, when you sell a stock, it takes 3 days for it to clear. When you buy a stock, you got 3 days to get in the money. Well, options do in 1 day. You got to have the money in your account the 1 day later, or when you sell it, you get the cash in your account the very next day. I said, hold it. You're telling me that I can sell an option for someone to buy my stock from me anytime between now and the 3rd Friday of October, and I can get $1. I can get $3,800 cash in my account tomorrow for someone to buy my stock from me at $20, and I'm perfectly happy to sell it at $20? He goes, that's correct. I said, man, this is a no-brainer. Do it. By the way, is it a no-brainer? If you're willing to sell it at $20, why not sell an option and let somebody buy the right from you to buy it at $20? Now, what is their risk? Let's talk about our risk in just a minute. What is their risk? Their risk is that they've invested that dollar. What are they hoping for? That the stock will go to 19.5, 20, 20.5, 22. If that stock goes to $24 and they paid $1 for the right to buy it at 20, is that a pretty cool deal on their part? What if it doesn't go up past 20? Do they risk losing their dollar? By the way, they risk losing their dollar. Let's say the stock doesn't go up to 20. Right? If it goes past 20, if it goes to 21 or 22, this stock is going to get taken away from you. Y'all see that? You have sold to someone and got paid cash for the, well, now you have the obligation. They have the right, not the obligation, but you've sold it, so now you have the obligation to have this stock bought away from you. Well, let's call it called away from you at $20. You will find out about this on Monday, after the 3rd Friday of the month, whether the stock was taken away from you. You don't have to do anything. It all happens electronically. It'll just say on your confirmation slip, account assigned, and you would have 3,800 shares or 1,000 shares taken out. Now, if that stock is at 19.75, it's not going to get taken away from you. If it's at 19 7/8, 20, or even 20 1/8, it's probably going to get taken away from you. If it's at 21 or 22, it's definitely going to get taken away from you. Y'all see that? Because you have sold to someone the right to buy the stock from you at 20. You put $3,800 in your account. Well, let me tell you what happened to me. It's what I just said, exactly what I just said happened. The stock was right around $20.12 on the expiration date, and I got 1,000 shares taken away from me. I had 3,800 shares. I had 1,000 bought away from me, which means I still had 2,800 shares. Now, the stock right after that climbed up to $21. And I said, well, how much is the $20 call going for November? I still had 2,800 shares. He said, well, the November $20 call option's going for $1.75. I says, whoa. You mean I can get 2,800 times $1.75, which is a little over $4,000, and somebody now has the right to buy the stock from me before the third Friday of November. Y'all see what I'm doing here? So I just sold the call again for November, and I generated another $4,000. And guess what? The stock went to 22, went back down to 19, but on the expiration date, it was right around $20.25, and I got another 900 shares taken away. And now I'm sitting there with about 1,800 shares now at the very, I got 1,100 shares taken away. I had like 1,700 shares, and the stock went back up to $22. And then I said, well, my goodness, I still have 1,700 shares. How much are the $20 call options going for now? He says, well, the $20 call options are going for $2.50. And I said, how much are the $22.50s going for? So this is the $20 calls. The $22.50 calls were going for about $1.50. Now what would you do? Now what would you do? Would you sell the call for a lesser amount of money, but in the hope of making $22.50 instead of $20? Or do you take the $2.50 now, which is the bigger chunk of cash now, and then get called out at $20? See, you don't know. So you're going to learn this at the Wall Street Workshop of which strike price to write these at. Right? Again, this is called writing a covered call. See, we need to decide things. If you really want to keep the stock to fight a battle another day, then you do the 22.50s, because there's a likelihood that you won't get called out of the 22.50s. If you sell the $2.50 option on the $20 call, you're probably going to get called out. And if that's what you want, just to get rid of the stock and get out of there, then that's the place to go. See, there's a lot of decisions to make. And again, why do you want to wrestle with all these decisions at home by yourself? Why not come for a 2-day formatted seminar and learn how to wrestle with these decisions together and figure them all out together? Now, what is your risk in this? This is called writing a covered call. What is your risk? Let's use our same example. Your risk in writing a covered call is what is called an opportunity lost risk. Okay, I said opportunity lost? Because if you've given someone the right to take your stock away from you at 20, what if that stock runs up to $27, $28? And could a stock do that? Yes. You give away the upside. You give away the upside. Yes, you generate cash, and that's the whole purpose for doing this, is to generate cash, but you give away the upside of this stock. That's your risk, is giving away the upside. But the writing a covered call process is very, very good at generating income. Now let me show you the Wade Cook formula for writing covered calls. Again, if I have any talent at all in the stock market, it is taking something that is maybe a little bit complicated, but trying to make it simple, but trying to figure out a way to repetitiously duplicate it again and again to keep generating income. Is that what you really want, by the way, is more income? We started this seminar by talking about cash flow, tax write-offs, and growth. If what you want is more income, then put the emphasis on selling things. All right, so let me show you the formula. There's a process here. Number one, there's 3 rules I'm going to show you 3 things, and then we'll go through the formula. There are 3 rules to writing covered calls. Number 1, we want to write covered calls in the price range between $5 and about $25, actually $5 to $20. Once in a while we go up to $30, but in this price range right there, in the cheaper stocks. There's $2.50 increments. You get a bigger premium per dollar that you invest or have to tie up on margin. You want to do it in the less expensive stocks, but still good stocks. Don't write covered calls on no-name stocks that have no trading volume. You want good, solid stocks that have a lot of volume, hundreds of thousands of shares a day trading, so there's a lot of buying and selling going on. Number 2, you want volatility. Now, there's another aspect of this that does not meet the eye. We want stocks that go up and down. We want them. We want a stock that goes from 14 to 18, back down to 14, back up to 18. Here's the rule behind writing covered calls. You buy the stock on dips. You buy the stock on weakness, and then you wait. Do you remember? When there's a small movement in the stock, there's a magnified movement in the option. Remember that? So when the stock's at 16, you buy the stock at 16 because that's a low part of its range. You wait for it to get back up to 18 or 19, and then you sell the $20 call. If you sell the $20 call when the stock's at 16, maybe it's going for 75 cents. But as the stock gets up to 18 or 19, the $20 call may be going for $1.50 or $2. You see that? So you wait for it to go back up. Okay, now I'm going to show you. Remember that buy on weakness, sell on strength, buy wholesale, sell retail? Let me tell you that sentence in writing a covered call format. Here it is. You buy the stock on weakness. You sell the call on strength. I'll say it again. You buy the stock on weakness. You sell the call option on strength. And the next rule is that we do these on margin. To make this formula work, to get the 20% returns, so if you want 22% a month returns, you need to only put up 1/2 the money for the stock. If you don't, then you're only going to get 11% monthly returns. Seriously. And by the way, if you do this in an IRA, and this is one of our strategies that you can do in an IRA is write covered calls. You can technically, but you won't be able to do margin investing in an IRA. Therefore, you're going to get 11% monthly returns instead of 22. You're going to get 14% instead of 28%. All right, let me give you an example. You find a stock. Oh, man, there's so many. I did one today on Gaylord Container, Interdigital Communications, Perceptive Biosystems, Trimble Navigation. It has that GPS global positioning system thing, Trimble Navigation. It's a $13 stock. We buy the stock at 13. That's a good one to use. Let's do that one. All right. For this example tonight, I'm going to do 1,000 shares. Trimble, TRMB. You can go check this one out tomorrow and see if this is a good one to do. Now, by the time some of you watch this on the video at home, this is going to be an old stock. But you may watch this in 6 months. Trimble Navigation was around 13 and a quarter. Let's just say $13 to make the arithmetic simple. Let's say you buy 1,000 shares of that. That would cost $13,000. Now, that's step one. You shop for the best price on the stock that you can. Step two is you divide it by 2. Why are we dividing by 2? Margin, because you only have to put up half the money. In this example, it would be $6,500. Now, that is the cash that we have out of our pocket invested in the stock. Now, before I go on, I want to take time out. I'll put this back up in a second, but I want to take time out and show you a rate of return, how to figure one. To figure a yield or a rate of return, a cash-on-cash return, this has nothing to do with internal rates of returns or depreciation expenses and what it's going to do to your tax brackets, just a simple cash. Let's say that you have a $10,000 investment and it produces $1,200. The way to figure rate of return is you take the profit or the gain, and for example, you would take $1,200, divide that by $10,000, and you would get a 12% return. Now, when you see the 12%, as most Americans would see this, what does that mean to them? 12% what? Annual. Everything in our brain is annual. Remember, if we're going to get you thinking like a cash flow millionaire, you got to get rid of this word annual. It has no meaning in our lives anymore. No, there's no more annual. We want to show you how to make 12% in 3 or 4 or 5 weeks. Okay, keep that in mind. The profit divided by the cash in is our rate of return. All right, now, let's go back to our example. You have purchased a $13 stock. You were watching it roll, and it went down to 13 and up and down and all that. And when it was down to 13 right here, you bought the stock. As the stock started to climb back up right here, you called your stockbroker and said, how much is the $15 call going for, say, the next month out? Let's say August, if we bought this in July. The $15 call is going for whatever. Let's say he says a quarter or 50 cents or $1. If that stock gets up around $14, $14.50, that $15 call could easily be going for $1. So you sell it. Now, if you have 1,000 shares of stock and you sell the option for $1, how much cash will that generate? Help me out here. How much cash? $1,000. So now you have $1,000 cash in your account tomorrow, and what have you agreed to do? You've sold an option on your stock that you own, so you're covered because you actually own the stock. Now, you could write uncovered calls. Uncovered calls means that you don't own the underlying stock. That's very risky because, my goodness, if that stock runs up to $16, $17, $18 and you've agreed to sell to someone at 15 and you have to buy it at 18 to cover your position at 15, that's too risky. So at the very beginning, I write uncovered calls now from time to time. It's not a major strategy in my life. I do it from time to time when I know that, and by the way, I've never ever written an uncovered call where I got burned. You know, you write uncovered calls when you know that the stock is not going to go above the strike price. You just know it. It just never has in its whole life, and you just know it. But that's not what we're talking about tonight. Tonight, we're talking about writing a covered call. So you got $1. What's your rate of return? Somebody got a calculator here? Let's figure this one out. You got $1,000 in based on a $6,500 margin investment. What's your rate of return? 18? 16%? 16%. 16% for 3 weeks, for 4 weeks until next month. Is that an okay return? By the way, if we had done this at the Wall Street Workshop, you would take, let's say it's 4 weeks, 1 month, 16%, and to annualize this times 12, this would not hit our 300% return. This example right here would not qualify for one of the three that I promised you on our guarantee. This would not qualify. You have to hit about 22, 23% per month times 12 to get up to that 300% mark. And by the way, once you come to the Wall Street Workshop, you're going to get real bored with anything under 22 to 25%. We find deals all the time where you can get 52 if you get called out. Now, by the way, would this substantially change your numbers if the stock went up to 16 and you got called out? What do you think now? Because remember, you bought the stock for 13. If you get called out at 15, that generates another $2,000. So now you have $1,000 in the option premium. That was money you took in one day. And you have $2,000 in the capital gain. Did y'all see the capital gain? That was figured by buying the stock at 13 and selling it at 15. That's $2 times 1,000 equals the $2,000. Now you have $3,000 cash in. So now you take $3,000, divide that by 6,500, and you have nigh on a 45% return. Now, if you want to qualify this one as one of our three, you take this times 12 months. Let's say if this is a 1 month return, and you'd have way over your 300% annualized return. This one would qualify as one of our three that we would show you. But you'd have to get called out of this one, right? The stock would have to go up above 15 for you to get called out. You see how that works? So we can show you options on stock splits. We can show you writing covered calls. Do you want to see another one, or do you got enough of this? You want to see another example? Let me show you one more example. Here's an interesting one. You got a company like Gaylord Container, GCR. The stock runs up to $8. It has a nice spike, about a $1 run up, actually a $2 run up in a day or two. Now, a couple weeks ago, I was looking at the stock, watching the momentum, and I bought this stock at $6. At $6 times 1,000 is $6,000. Now divide that by what? 2. For what purpose? Margin, because now you only have 3. And by the way, you bring a calculator to class when you come to the Wall Street Workshop, because I'll say to you when we put these up there, the instructor will say, okay, everybody run the numbers on this. Now they'll do it with you the first couple of times, but pretty soon you should have this down, right? Take the price of the stock times 1,000 or whatever, how many shares you buy, divide it by 2, then sell the call, right? Figure out how much cash you have in it, then figure out your rate of return. Okay, let's go back to this one. In this one here, I have $3,000 cash invested. The stock runs up to 8. Guess what? I don't think it's going to be sustained up there. I think it had a nice uptick in the stock for, the market was good the last couple of days. Boom, it just went up. I don't think it's going to do it. So I called up my stockbroker and I said, how much is the $7.50 call going for? By the way, the $10 call was going for the $10 call for next month was going for a quarter, 25 cents. But look at this. The stock is at $8. The $7.50 call option was going for $1.25. $1.25. So that's what I sold. So now I have $1,250. Is that a nice rate of return right there? $1,250 on what investment? $3,000. What's my rate of return? About 35%. Y'all see that? Is that a nice deal? This would qualify as one of our 300% transactions. Now, what happens if the stock stays there? What if the stock goes back down to $7.25? Do I get to keep the $1,250 or do I have to give it back? What do you think? You get to keep it. That was somebody's option that they paid. That was their gamble, was it not? And it didn't pan out for them. I don't even know who that person is. I just sold the call. I have $1,250 cash in my account. And guess what? If the stock goes back under $7.50, I get to keep the stock to play again another day. And then if it goes back up close to 8, I sell another call. I get called out or not the next month, and if I don't, I sell another call. What if I get called out of this deal? I bought the stock for 6. What am I going to get called out at? What price? Not at 8. What price, everyone? $7.50. The strike price that I sold was $7.50. Would that be another chunk of money in? 1,000 times $1.50 profit, right? 6 up to $7.50, another $1,500. So take that $1,500 plus this $1,250, and now I have $2,750 cash in on a $3,000 investment. Nice? You do this a couple times a month, and all of a sudden you get real spoiled with anything under 25% returns. And you learn how to do this. By the way, I told you we're averaging between 9 and 11 transactions per class that get over a 300% annualized return. Now, all I'm committing to is 3. 3 at the class or within 3 months. But our average right now is right around 9. Now, I don't know what kind of rates of returns you're making. But even here tonight, options on stock splits, rolling stocks, writing covered calls, pure option plays. I mean, there's a myriad of things that you can do. What kind of returns do you want? Now, I want to give one more comparison. I've tried surfing in Hawaii one time, and I can't even get up on my knees. I'm not very good at this at all. But I watch surfers all the time. Have any of you in this room ever been surfing before? You actually got up on the board? That's amazing. I have never gotten up. How many of you watch surfing? How many have seen it on TV? Or how many have actually been to a beach and watched a surfer come? Okay. Now tell me what happens. The surfer's sitting out there waiting for that perfect wave, the set of waves or whatever, and as soon as they feel like a wave is coming, they see one coming, what do? Do they keep looking at the wave, or do they turn their surfboard and head it towards the beach? What do? They get it going towards the beach, and then what do? Before the wave gets there, what do they start doing? Paddling. Why do they paddle? Why do they paddle? Because they want to get the speed up. What if they don't get the speed up? Can the wave just go right past them? So they want to get the speed up for the wave to go right past them. All right? Guys, life is not too much different than that, and the stock market is definitely not too much different than that. You have a choice here tonight. A lot of you have already signed up for the Wall Street Workshop. A lot of you watching at home, I hope you're thinking about it. You can call the 800 number on the screen and get registered for Wall Street Workshop. They're sold out all over the country. I hope we can squeeze into one that is convenient for you. But the choice is yours, and here it is. Do you want to get ready and take advantage of these stock market investments before they get to you, as they're getting to you, or after they've gone past you? When do you want to get ready? When are you going to get ready? Let me give you an example. We have a crack research team. We've got financial analysts and other people I've hired on and trained to study different aspects of my strategies in the stock market. One of my favorite strategies, you could probably guess, is stock splits. We do research on companies doing stock splits, companies that are hitting their all-time highs and all that, and looking at companies and looking at historical patterns. We have determined right now, and I don't know if it's going to be true by the time anybody at home watches this, but right now we've determined that in the next 3 months, through the summer of this year, through the next 3 months, there's going to be somewhere between 94 and 102 companies doing stock splits. And what are you going to do about it? There's going to be that many companies. You're going to see several more banks, several more oil companies, and then you're going to see a whole other rash of computer-type companies, high-tech companies, and it looks like right now we're starting to, all the pharmaceuticals, the big-time pharmaceuticals are all getting ready to split. There are about 94, at least 94 companies that are going to do stock splits. I got a question for you. To learn how to play these stock splits, the 5 times to play the options on stock splits, and when to get in and when to get out, how to capitalize your profits, how to make maximum returns. Do you want to wait until all those companies have done their splits and moved on past you, or do you want to get ready and get fit, financially fit, and ready for the opportunity before it gets here? And that's what I'm inviting you to do, is come to the Wall Street Workshop and do that. Let me give you one more comparison. Do you guys think that I have invented and come up with and developed all these formulas without making any mistakes? Or do you think that I learned a lot of what I know by making mistakes? What do you think? Isn't it truly a wise person that can see through the eyes of someone else? You can learn all this information yourself, or you can go to somebody else who has been there, but isn't it truly a wise person who can learn from somebody else's experience, good or bad? See, that's a true wise person. They don't have to say, you could say, oh, I'm going to go do this myself. I don't need to come to the Wall Street Workshop. Go ahead. Try it. You're going to pay a lot more. As a matter of fact, I think that this seminar, the Wall Street Workshop, is the first time anybody has ever come up with a seminar that will cost you about $100,000 to not attend. Now, as of the special tonight, I threw in a whole bunch extra. Now I have to honor for all the people at home. This is going to cost $36.95, plus I threw in 6 months win, plus the whole the audio set here of 0 to Zillions. That's $3,695. So there you got $3,695 to come and get all this extra help and all these things to go, or it's going to cost you $200,000 to learn all these things on the street yourself. So if you say, no, I'm not going to go, it just costs you $100,000. If you say you're going to go, it costs you $36.95. I'm serious. Now let me give you another comparison. Imagine, if you will, we've got this aisleway right here. Imagine, if you will, that in this aisleway, we're in a war, and there are a whole bunch of landmines in here. You step on them, they blow up after you step on them, right? And somebody said, you need to get from here over there. Let's say you had to save your kid on the other side of this landmine, this field. And you'd have to do it on your own. Pretty risky, is it not? How much value would it be if somebody gave you a map of where all the mines were? Somebody literally handed you a map and said, here you start right here, there's a mine here, there's a mine here. By the way, that map would be invaluable, would it not? What would be the value of that map? But would it still be a little bit scary to take a map and a piece of paper? What if somebody were able to say, there's a mine right there, and they've been there before. They've been across the field. What if somebody was willing to take you by the hand and say, step right where I step? That one mine right there, we don't want to avoid that one. We don't want to do that one. What would be the value of someone that was willing to take you by the hand and take you across the minefield? What would that value be? I have made all the mistakes. I have made some doozies. And I have learned from my mistakes, and I try not to make them a second time. And even today, I still make mistakes as I'm developing new things. There's a whole bunch of new strategies, by the way, we're coming up with for our advanced Wall Street workshops and all that. I don't even want to teach them until I perfect them, until I've been across the minefield. I'll let my legs get blown up a couple times before I will start teaching those strategies. I have been across that minefield, and my instructors have been there with me. And you come to the Wall Street workshop, we'll take you by the hand and get you across there and show you these strategies. What is the value of that? So once again, I invite you to give us some serious consideration. I guess there was a little bit of confusion at the break. I included everything that we talked about. The $36.95 includes the best seminar, which we write it up. It includes 6 months to win, not the 3 months. It includes the 0 to the, the whole thing. Any of you watching at home, you can just call the 800 number. It's 800-872-7411 to talk to one of our reps and get signed up for the next Wall Street workshop. For those of you here tonight, I thank you for coming. For those of you at home, get your tush in the cush at one of our seminars. See you there. Thanks.